What is up, everybody? Welcome to Benzinga Live. I'm Aaron, Spencer, Aaron, I don't know, wherever, whatever. We're here, you're here, and we are excited to have you because the market is interesting. Let's just call it interesting.
To say the least.
David Green just said you have to be a magician, which does not bode well for your chances, nor my chances, I feel like. But that's where we're at right now. But
no, I mean, to put it into perspective, yesterday was the first day in nearly, I think, 14 years since 2008 that the SPY was down at one point more than 4% and then closed in the green. So yesterday when we started the show, I mean, everything was down like 3%. Today we're down 2.5% again. So
can I give you a stat along the lines of the one you just said?
Yeah,
a fancy
of course.
stat. This is from Bespoke Investment Group. Great follow on Twitter. Shout out to Bespoke. They only found 5 days in the history of the U.S. stock market, in the history of the NASDAQ composite, where the NASDAQ composite index was down at least 4% at one point during the day and closed green. 5 instances in the history of the NASDAQ Composite Index. Yesterday it happened. It happened once in 1997. It happened once in October of 2000. It happened once in July of 2002. And it happened in October and November of 2008. Those were the only times. That's how rare yesterday was.
yeah, but also, so I'm looking at it right now. In 2008, there were 2 instances, like you mentioned.
Mm-hmm.
But I'm looking at one right now. The intraday loss was down 4.76%.
Okay.
Can you guess the close?
The closing gain?
Yeah,
Up 0.5%.
up 6.5%.
Oh.
So that day in 08 had a
What was that? October?
November 13th
November
had a
13th?
more than 10% move. Put that into perspective. So it was down let's call it 4.5% at one point.
Wowzers.
Closes up 6.5%. Yeah, I bet a lot of people that panic sold while the market was down 4.5%, and then saw their stocks that they sold and closing the day up 6%.
Yeah,
that probably
that's
didn't feel
painful. All right, we got a big show today, a lot to get to. Let's start us off. We got David Green coming on right now. We're gonna do some live trading with David Green. After that, I'm very excited for our first interview of the day. We're going to be talking to Namit Malhotra. He is the CEO of a company called DNEG. It is a visual effects company. They are going public. They announced today via SPAC. We're going to talk about the business of visual effects in movies, in the metaverse. That'll be at noon. We're talking to Robert Roy at 12:45, Christian Fromhertz at 1 o'clock. And Tim Quast, maybe, if he gets back to me at 1:45. So, big show today, a lot to get to. Let's roll.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news. I just found out that Randy from our news desk decided to go get Shake Shack and didn't ask.
Don't put him on blast.
He didn't ask anyone else if he wanted
Shake Shack is great though.
Shake Shack is
Shout
great.
out Danny Meyer.
Let's bring on David Green.
St. Louis, a fellow St. Louisan.
David Green, do you have Shake Shack down in Florida?
Absolutely. Yes.
Yeah, it's pretty good. Pretty good.
I actually like BurgerFi better, which we have down here also.
BurgerFi.
We don't have BurgerFi.
Personal preference.
Yeah, it's a public
BurgerFi.
company, Aaron.
Oh,
Yeah.
well, maybe I should
BG,
know about it.
BGFI.
Do you trade it?
BurgerFi? I don't know
Yeah.
if it's public or not. They just have.
It is.
burgers.
It is. It
There
is.
you go.
Yeah. It's BGFI.
Let's
Oh,
look.
BFI.
I might have to start investing. I eat enough of it.
$5, David. There you go.
BFI.
BFI. There we go. Anyway, what are you trading today, David?
BFI. Hold on. I got to look at my BurgerFi. I might want to buy some of this thing.
It's
I
beaten
alone-
down.
I
I'll tell you
alone
that.
can prop up the stock.
Zoom out on this chart and look how beaten down it is.
You know what that
Look,
tells me?
everybody in my room wants to buy some BFI now. No, don't buy BFI. Wow. No, if you can't buy it now, you can never buy it, right? Just like AMC at 40 and 30 and 20.
Right now, the stock is cheaper than their burgers.
Hey, boom.
No question about it. You can buy a share of stock for less than a burger cost.
Very nice.
What are we trading today? We're being Jack be nimble, Jack be quick. I can tell you that right now. We have both yesterday and today. When markets get like this and they sort of get out of hand a little bit, and you're not sure if levels are going to hold and stuff, we cut our size, and I think that's a smart thing to do for everybody out there. Yeah, America's Best still good, guys. If we get it right now, let's hang out for one more minute. You guys know I've been doing this, since the Constitution was written, and I have not seen markets like this in my career. And you just got to be careful. All right, cancel it now, guys. We just missed it by
Just to elaborate on that for a second, David, just in terms of like consecutive down days, or what do you mean?
Just the volatility.
Okay.
We talk, and people are talking about correction and crash and yada, yada, yada. We live, can you hear me?
Yep.
Oh, I thought I lost you guys. Hold on. This is a different time. The trading isn't like it was when we had a crash in 87 or 2008 that sometimes took 5-10 years to come back from, right? We're not in that market anymore. I want to show you guys. Hold on. Tesla. All right, yeah, Tesla, you can try really small at 904. Again, guys, cut our size, but 904 is a support level in Tesla. I think we're in a market now when we have these big corrections, or anyone wants to call it a so-called crash. It's not going to last very long. We're just in a different time. Even if we go back to COVID, right? How long did that last? By the end of the year, the market had made new highs. So we get these swift and brutal moves up and down, and still the technical analysis. What's up, Mike? Is what keeps us afloat, right? I want to show you guys the SPYs from yesterday, and maybe we'll get back down there again today. But this was a spot that we were looking to load up on a bunch of stuff in the spiders on a daily chart. Where was it? Oh, you know what? Our charts are all screwed up now. Because here it is. Okay. So weekly chart. We had a level of 419. Let's just call it 420, right? From 480 to 420, we're down 60 points. That would have been about a 15% correction, 13% to be exact. And that was a level where we wanted to get in and buy a whole bunch of stuff at 419.20. We came pretty damn close yesterday. We came within $1 of it, and you saw what kind of rally we had from there. So again, that's my first spot that I'm gonna look. And if we can get, and I don't want to scare anybody, but 350 is our weekly level. At 350, we're down like 27%.
On the SPY?
In the SPY. Yeah.
I don't want to hear that.
Well, I'm looking technicals, right? So 420 in the SPYs is gigantic. That's we're nowhere near that now, although we came close yesterday. And then 350 is a spot. If we go to 350, we're down 150 points. 35%. Can it happen? Why not? My point is, though, even if I think any of these things happen, it's not going to last long. We saw what happened yesterday when we got really close to our weekly support level. The market turned around and went up 1,000 points. But if you're trading this market, you just got to be so good, and you got to be so careful, and NVIDIA's coming. Hold on, let me look. We were looking at a double bottom in NVIDIA at 220.70, and it just got to 220.85 and went up $1. All right, guys. So let's cancel it. So I'll explain this trade to everybody that we're looking at, right? NVIDIA made a low this morning of 220.80. It went up $8 from there, and we were trying to buy it again if it got to 220.80. It missed by 5 cents and just gave $1 trade. So we're going to cancel that for now. Let's see what the next move is in that. So, technicals is where it's all at in any kind of trading market. I want to show you Tesla, guys, from yesterday. And a bunch of people in my room caught. It was Tesla and it was Microsoft that were pretty incredible on our charts. I'll show you Tesla yesterday. Look at Tesla, guys. Okay. We had a daily level in Tesla at around, I think it was 858 or 859. Look what happened when we hit that level yesterday. This is a 200 EMA. So that is a strong, strong support level. We hit that level, and the same day we went up, 90 points from that level. So this is a big spot that a lot of people got into this trade yesterday. And then we had a giant one in Microsoft. I'll show you Microsoft too. I think Microsoft was also the weekly, if I'm not mistaken. Look at this, guys. Look at Microsoft. I mean, look how our technicals are telling us. It's stock down from $350. It exactly hit our level around 276 and gave a $15 trade off that yesterday. So these are the type of things we're looking for when the market starts cratering like this. When we get daily and weekly levels in some of these bigger stocks, they line up to be at least, the same day or a 1 or 2 day trade. So
here's what I don't understand, and this is not as related to trading what we're doing here, but more just on the valuation front. So I get that the valuations on some of these tech companies got a little out of hand, but right now, I mean, Microsoft's PE is like less than 30. It's lower than Costco's.
Yeah, and your point is,
I feel like, I mean, we're getting to a point where I'm starting to look at some of these companies like Microsoft, Apple, and saying, hey, this isn't a bad spot to add some in the long term.
And that's what we found yesterday in Microsoft. That was a great spot if you're not in the stock, right? Or if you're in a stock and you're getting hurt, that was a beautiful spot to either start buying it if you're not in it, or add to a trade that you're already in. Yeah, I mean, is Microsoft going? Yeah, Microsoft's one of the. I love Microsoft, right? That's one of my long-term favorites too. And you know how I feel about Apple, right? Apple, I'm hoping and praying I can get it down to this 140 level, which is weekly, so I can get back in some of the stock that I've sold on the way up. We have earnings coming out in Apple, right? Earnings are out. Where are we?
Oh, and on the Microsoft note, we should note that Microsoft reports tonight. So
correct.
Aware of that.
And we will be in the room live trading that when it happens. And look, if you like, here's what you can do with Microsoft right now. This is the only
I mean, in this market environment, I'm very excited to see how Apple and Microsoft, like say they have great earnings. Will the market weakness overshadow the great earnings, or will these stocks look even better because in a rough patch they're diamonds shining because they have such great earnings? I don't know. I think we'll see one or the other.
Yeah, I mean, my thought, if we look at Apple historically, the stock never acts well after earnings come out. Very rarely anyway, right? If we go to a weekly chart in Apple and just go back to the last bunch of earnings, the stock, for the most part has gone down every time the earnings come out. And they have record earnings every single time they announce earnings, right? So look, in this market environment, I kind of lean towards the latter. I don't think it matters what they're going to say. I think things are going to go look to the downside anyway. What happened in the video, guys? Did we just miss that double bottom and it went up $1.50? Yeah, what else is new? Yeah,
if you have any tickers for David, you want him to drop them in the chat. Okay, Bob, I see you. Bob is asking about Schlumberger. You say Schlumberger, I say Schlumberger.
Yes.
Bob wants to know about SLB to 40.
Okay, let's take a peek.
Maybe.
Now, Schlumberger is going to be really closely tied to the oil market, correct? I would think.
Mm-hmm. That's what we know.
Yeah, I mean, look, we got a little overextended up at 38. We pulled back to a support level at 35, and now we're looking good again. Let's look at the weekly. Yeah, I mean, this is going to be directly tied to the price of oil. So let's look at a little chart of oil, see where we are.
Oil to 100? Question mark.
Yeah, with all the stuff that's going on in Russia and stuff. I think Goldman Sachs put a $100 price target on oil not too long ago.
You know what's funny is every time oil gets on these runs, there's always people that come out like, oil is going to 200, and it's like, come on.
Well,
oil's not going.
Well, Spence,
oil's not going to 200. 100, I could see. 200, come on.
It's not just oil, right?
Yeah, I mean,
AMC is going to 200. AMC is going to 1,000.
Yeah, you're right.
You guys know how I have felt about AMC. Every time I come on here, I say the same thing, right?
Yeah, I know.
We broke that gigantic weekly level of support, and I think when we were on last time, I said if it doesn't hold that level, just say goodbye to that. Whatever. Again, technicals though, it's just a technical level. AMC is going to 500,000. All righty. SoFi has been really good to us. Right now, we have no position in SoFi. When they got their bank charter, we were in the stock at lower levels and we sold it all. Matter of fact, I was talking to Spencer, right? And we said the bloom would probably come off the rose on that.
And did it ever?
Even after getting the bank charter. Now, I love this stock again long term, but I want to see if I can get it a little cheaper before I even get in it again. So we have no position in SoFi right now. But I like it. We actually bought Palantir for the first time in my life yesterday.
Really?
Yeah, first time ever. We bought it a little bit under $12, and it was the first time I ever bought it. So we have a little bit of Palantir. We'll see what happens. I mean, I remember this stock. Isn't this another Kathy Wood favorite? I think. I don't remember.
It's a retail darling, which
okay.
I bought Palantir for I bought it for a short swing trade that I got out of a couple weeks ago.
Yeah, this is the first time that I've even looked at it this whole time, and we bought. I think your risk reward is good down at these levels, so we bought a little Palantir to hang on to for a little bit.
Wait, someone had a suggestion. Oh, that's right.
AMC getting closer to my $4.99 buy point. I love it, Jack. Be careful at $4.99. It still has $5 to go down. Nvidia, guys. I don't know. The trend is 223.90, but we know this stock is wackadoodle, right, guys? I like the 225.10 in Nvidia. You can try it small on the trend, 223.90. So those of you who are watching, guys, we're trading the markets live all day, and I think we have 100 people in the room. Anytime they pop something up, we go look at it. But we're here for you guys today. Let's do more stocks.
David, you want to look at Shopify?
Sure.
You want to look at Shopify?
Shopify was another one from yesterday, right? I think this stock had 200 point swing from yesterday.
Well, when you're $1,000, that'll happen.
Yeah, I mean, the stock made a low of $780 yesterday and closed at $950. But this is another one long term. Look, I mean, it's been horrible. But here, we had a level in that of about 820. So I would say, again, if we break this 820 level in Shopify, that's your line in the sand. If we break 820, and you can see, we went below it a little bit, but we bounced back. 820 is your line in the sand in Shopify now. Look, all these stocks, everything that we're looking at now, it's just going to trade with the market. If we get another bagel schmear in the market, everything's going down again, right? UPST traded $75 yesterday. This stock is down from $400 to $75. So one of the things we talk about all the time is it doesn't matter where a stock was. It only matters where it's going. So, and these things are going to get cheaper if the market gets cheaper. I mean, look, Kramer was on last night. If anyone watched Kramer, and he said all they did was buy yesterday. And whenever the markets go down, that's what you have to do is buy. And I guess
it's easy to say that though now in hindsight, and obviously you're going off of what your indicators, technical indicators are saying, but for people that may not have that on their screen, it's hard. It's hard to look the market in the face down 4% and say, "Yep, I'm going to come in here and do the buying."
There's no question about it. And
it's very difficult.
And one of the things, and here's why there are no experts, guys, and CNBC and everybody else and whatever. Everybody's got an opinion, but he was expecting big follow through in the markets this morning, and here we are. We're down 1,000 points. So
yeah,
everything that he bought yesterday is down a lot today. So if you have a long-term horizon, which there's a lot of young people that are trading, that are starting to trade now, and in my room and everywhere else. When things like this happen, you start to pick at things. That's what you do. But you still use your technicals even to do that. Like yesterday, when we were at our lows, the technicals were telling us in the spiders that we were very close to a point where you can start buying stuff. And that's what you do. And you start slowly and you add to positions, and you're going to be fine a year, 2 years, 3 years from now, if that is your time horizon. But if you're going to be trading in this market now, if you're not using technical analysis, you're done. You're done. There's no way, because you're going to say something can't keep going down or something can't keep going up, and you're just going to get blown out of the water. 150%. Bitcoin was something that we were looking at, right? Let's talk about Bitcoin. Everybody's into Bitcoin, right? And if we go to the weekly chart in Bitcoin, again, it didn't get near the levels that I wanted it to. I thought, and if we keep going down like this, I think Bitcoin can get to 27,000. That's the weekly level in Bitcoin. So that'll be a spot that I start looking to buy a lot of Bitcoin related stuff if we can get down there. So, even for long-term stuff, to me, it's all about technicals. I'm not buying companies with bad fundamentals when I get into them, right?
Well, how do you know that? How do you know that?
Well, because I'm buying an Apple, I'm buying an Nvidia, I'm buying a Microsoft, I'm buying, stocks that have strong fundamentals that have been great for years and years and years. And when these things go on sale, you want to jump in and buy them. It's like your favorite coat is $100 and it goes on sale for $50. What are you going to do? You're not going to buy it. So these are the stocks that you look for when you get opportunity. It's when the market is really going down, for lack of a better term, right? In my mind, guys, there's no such thing as a crash. A crash is just a buying opportunity if you're a long-term trader. And I don't think any crash that we have, as I said earlier, these days is going to last that long. I just don't. The reason that we're even going, all right, my reason that we're going through what we're going through right now, why the market is doing what it's doing.
Please.
Well,
yes.
The one thing that the market hates is uncertainty. You can pop all the bad news. Look, they came out their last Fed meeting, or maybe I think it was the last one, and said they're going to raise rates 4 times next year, right? The market made all-time highs off that.
Yeah, I mean,
whatever they said, it doesn't matter what they said, but they came out and said what they were going to do with certainty, right? This is what we're going to do. And the market shrugged off anything for that, and we went and made all-time highs. Right now, there is a tremendous amount of uncertainty in a lot of different things, right? We have geopolitical events going on. We have Corona going on and Omicron going on. And the market just does not like uncertainty. We'll climb walls of worries from today till tomorrow if you put it in front of us and tell it what it is. But the reason we're doing, my opinion, the reason we're doing what we're doing now is there's a lot of uncertainty. We have a gigantic Fed meeting tomorrow, right, guys?
Yeah.
I mean, that is going to be, God knows what's going to happen from that. I would think if the markets, and again, just my opinion, are down significantly, it might change their mind. They might not be in such a hurry to raise rates, and they might come out and say that, look, market conditions and geopolitical events, we're going to pull back a little bit, and maybe we'll only raise 1 or 2 times next year. Then you'll get a gigantic relief rally in the market. If they come out with all this other stuff that's going on and say, nope, we're staying the course, this is what we're going to do, we're going to follow through on that, then I think we get a gigantic rip down.
Even if, like, I knew what they were going to say, I don't even think I could tell you how the market will react.
Me neither. That's another thing too, Spencer, right? Who knows?
Okay, well, let's start with this low-hanging fruit. Has ARKK hit a bottom? Well, who can say for sure? Reese, who is asking that question. But
let's take a look at the technicals, right?
Let's see what David's indicators say.
All right, so I'm going to a daily chart first. This stock is in a horrible, horrible downtrend. I'm sure the weekly is going to look worse. So let's take a look at the weekly. Yeah,
it's pretty bad.
It's pretty bad, right? So to me, okay, I can't even look at this stock as far as getting back in it until a stock can break this downtrend that it's in, which is up at about $76. So I can't get positive on this until it could show strength and get above at least a daily downtrend, right? Now, has it hit bottom? Your guess is as good as mine. Did it get really oversold yesterday after being down 5 days in a row and getting a relative strength down around 20.20? Yeah, it did. So that was certainly a spot to play a bounce, but this chart looks horrible.
So the thing I'll say about ARK, and this goes for any fund, but ARK especially, is like, ask yourself if you really want to own the stocks that are in this fund. And if you do, that's fine. If you do, that's totally fine. But, like, take a look under the hood. See what it's got. It's got a lot of Zoom, right? It's got Roku. It's got
Tesla's
Block.
the biggest
it's got a lot. Yeah, it's got Tesla.
Coin, which made all-time lows yesterday.
Right. Unity. Right. And there's nothing wrong with those necessarily per se, but like, ask yourself if you want to own those companies. Number one. Number two, I think if you're buying ARK with the expectation that it will maintain its returns from the last several years, because from 20. Well, I think
would have been good, Jason. But
it was like from 2016 to 2020, it was like one of the top performing ETFs like on the market. If you're
up hundreds of percent, yes,
1,000 up 1,000
right, exactly.
percent. Or, I mean, if you're buying it to expect that, you're chasing past performance, which is a great way to lose money. So there's nothing wrong with owning growth. I own ARKW. I've owned it for a minute. I don't intend to sell. It is a small slice of my pie, but know that the returns are cyclical, and if you're buying something to chase the past performance, that's not a great reason to buy.
Yeah, that's a great lesson. That's a great lesson. Yeah, I mean, she's in these high growth stocks that when they all go in one direction, and this is what's going to happen to the fund when it happens.
Okay, fine. We've had a couple questions about CRISPR, CRSP. I don't know. I'm assuming it's down because it's biotech, and biotech is so. Oh my gosh.
Yeah.
CRISPR was $220.
CRISPR was
a year ago. It
Correct.
was $220.
Correct.
Aye.
Yeah, but again,
wait, not a year ago. Wait, yes, a year ago. Sorry, I can't do that.
Yeah, February, just about a year ago.
Yeah. Okay.
It's the same thing. These things got to show me some strength before I want to get involved in any of them. But Myrna was $500 4 months ago.
I know. And Moderna's been brutal.
So the one thing that we talk about, I don't care where a stock's been. We only care about where a stock is going.
And the other thing I'll say is, in addition to looking at like things like David's indicators, if you're looking at a specific stock, like let's say CRISPR, for example, right? CRISPR, unless it has specific news on their drugs, CRISPR is not going to move in a vacuum. It's going to move more than likely with the rest of these sectors. So take a look at the IBB or the XBI or other stocks like Moderna, right? Take a look at that. Understand what the broad industry trend is. Is everything in the industry moving down? Then what makes CRISPR so special, right? Is everything starting to turn? Well, then that's a different story. But I would say don't. Take a look at, if you're going to look at a stock, take a look at the stock's peers. Take a look at their friends. You can do that in Benzinga Pro. Just look at an ETF, see what the top holdings are on the IBB. More often than not, stocks moving groups. What about Lucid?
I mean, let me just talk about biotech for a minute. This has been just a horrendous time for biotechs. I mean, there has been no relief in these things for, I don't know, 3.5 months now.
It's been
just
tough.
None. It's been horrible. Okay, go ahead. Let's move on.
Someone asked about Lucid.
Yes. I'm just watching Tesla here, guys. We got a bid out if we get down to this 904.30 level for a little trade. That'll be down $13. So we're keeping our eyes on that. All right, Lucid. These things kind of all trade together too.
The EV stock that was for whatever reason holding up better than the rest, but not right now.
Yeah, I mean, look, a sinking market's going to sink everything that we are.
Exactly.
So we're in a daily. We're in the middle of everything on a daily, but I could tell you this. I like Lucid longer term. I'd be a buyer of Lucid if we hit our 200.
Longer term is the key there. Longer term.
Yeah, longer term, I'm a buyer if we hit 3150. Right now, technically, we're right in the middle of everything. Look, if you guys are in stocks that you believe in and you believe the story and the fundamentals and all that stuff, that's fine. Okay. If you look for spots to add to these things that make sense technically to add to them, that's all I would say. For anybody who's in these things, especially at higher prices, you got to look for stocks. Things are starting to come on sale a little bit. So look to add to your stocks at technical levels.
What is going on in Bed Bath & Beyond? Whoever asked that. Bed Bath has decided to rip up 8%.
Holy cow. The Qs are now down about more than 3, approaching 3.5%.
Good call out there.
Market's down 1,000 points again. Yeah, BBBY is kind of bucking the trend. What though? Isn't there a lot of takeover speculation and all the, Kohl's got taken over yet?
Yeah,
that processing being taken over.
Okay, yes, that's
Macy's
true. So you can look at
yesterday.
Macy's, yes, Macy's, Kohl's, Nordstrom, a lot of retail yesterday. I don't want to put Bed Bath in with that group for the sole reason that the stock itself, even though it belongs in that group, the stock is sort of its own beast. But
yeah, it was a meme stock for a bit too, wasn't that one? Didn't it go to like
yes, and it was
$25 or something, $30?
Exactly, it was for a minute. It's got a low float. It's easy to push around.
Yep.
It's easy to manipulate. It's got 40 million share float. All it takes is one big fish, one big whale to come in there and push that guy around. So it does not take a lot of capital.
$54.
Right.
I
Exactly.
mean, this going to 54 was like AMC, GameStop going to 483, right?
Well, yeah.
It's the same thing. So
But no, I mean, so all you can do in the case like Bed Bath today is look at it technically. That's all you can do. There
Yeah.
is no, there's no fundamentals to back up this move.
no, none
So-
whatsoever. And there's
Because
nothing
think about
technically
it
either.
like this, right? You've got the whole market is down. The S&P is down 2.25%. So Bed Bath is actually up more than
Percentage-wise.
It's up it's 9 percentage points, almost 10, actually more than 10 percentage points better than the overall market. Yeah. So the relative strength today is off the charts. This is not fundamentally driven. This is just stupid market driven, and this is what happens all the time.
Exactly. So anybody out there want to tell me what's going to happen the rest of today and tomorrow? I could use a little help.
I'm sticking with my thesis of Chop City. So whatever we do today, it'll be the opposite tomorrow. That's where I stand going forward.
All right. I like that.
The only thing that gave me pause was we did make a significant new low yesterday across the board, but that vicious bounce has reaffirmed my theory of we're just gonna be and maybe the SPY goes back to like a 460, but I can't really see us I just can't really see us doing much of anything for the rest of the year. At least maybe if we just get some rate hikes out of the way. I don't really know.
The rest of the year, it's only January.
No, but I'm in the camp of like we just might just see this up down action for the whole year. That's sort of where I'm at. So.
I'm buying Microsoft calls into close today.
Ooh, let's take a look and see which ones you're buying so we can hold you to
All right,
it.
and all right, let's do that, and then we got to wrap because we got our next guest here. So Microsoft
All right,
calls
let's go
into
Microsoft.
the close.
Hold on.
Yeah, I just think we're going to see blowout earnings. I think
Let's get the
I
option
think
chain
no
up.
matter what
Hold
the
on.
overall market does tomorrow, it's not going to matter because people are going to realize that Microsoft has gotten a little too oversold. It's still a massive company making a lot of money,
Oh boy.
and that's what matters at the end of the day.
All right, so you see how expensive these things are? What are you looking at? We're at 286 right now.
They are so expensive.
Guys, what's the expected move in Microsoft tonight?
What are you looking at? Are you looking at the expiration for this Friday?
Yes, 3 days.
Let's
Got to be at
do
least
some.
10 bucks.
Let's do
Expensive.
305, about 8% upside.
All right,
break
so the
even.
expected move is $20. Okay, so if you
All
like
right.
it, where are we now? 286. So 306. That's about where you go. That is the expected move. They're trading at about $3.40. That is the expected move right there. So if they come out better, it could be much better than that.
$20 in either direction.
All right, so $20 up 305, so $3.20. $20 down 265 or $3.55. They're actually a little more expensive on the downside. I think that's just because people are scared of what's going on in the market.
Yeah, people
right
are buying puts right now to hedge. I don't know. I just think
Can I make a PSA?
Sure.
We are going to be live streaming the Microsoft conference call today. It's at 5:30 p.m. Eastern time. Check it out on our channel. We're going to be streaming that. If you all want to listen to that conference call.
All right, I'll let
All
you know
right,
how to
guys.
go, David.
But yeah, Jack be nimble, Jack be quick in this market, guys. Everybody just be careful. Look for longer term levels and don't panic if the market goes down a lot from here. That's it. Just don't.
Hey, that's it. All right, David Green joins the show every Tuesday. Thanks a lot, David. We'll catch you next week.
Thank you, guys.
All righty, let's move on to our next interview here. This is very exciting. This company that we're going to have on right now announced a merger today. They're going public via SPAC. We're talking to a visual effects company. We talk a lot about streaming on this show. We talk a lot about the metaverse and video games, and this company would sort of check all of those boxes in a way. DNEG, we're talking to the chairman and CEO, Namit Malhotra. They are merging with the SPAC. The SPAC ticker is AKIC. That ticker will, of course, change when the merger is completed, but that is your ticker for right now, AKIC. Let's give Namit our special intro, okay, Aaron?
Let's do it.
Let's give him a special intro. Namit Malhotra, welcome to the show.
Hi guys, how are you?
Good. How you're having an exciting day. Congratulations.
Yes, thank you. It's been a long time coming. Finally glad to be here.
Yeah, speaking of that, so you tried to IPO a couple years back, right? And you decided to pull it, and so now you're doing the SPAC. So why now?
So, for us, obviously the idea has been to, get to a public platform because that's where we've identified massive opportunities for our future growth. That being said, a few years ago, DNEG being a London company, the original thought was that we should try and list it in the UK in 2019. With the Brexit, volatilities and the markets being choppy, it felt like it wasn't the right time to go ahead with it with all the stuff that was happening. And then there was the pandemic in the world, and with the success that the content companies have had in the US, it felt like is the best time to be entering and being in the market where all the big content players are at, and really build our own proposition from that standpoint.
So I've got your hype reel up on the screen right now. So again, you guys are a company that provides visual effects to all the major studios, streaming platforms. You've worked on Marvel, The Matrix, James Bond. Is that a good summary of the business?
Yeah, so we do animation and visual effects.
Okay.
So you saw there was a visual of Ron's Gone Wrong, which is a film that 20th Century produced. And that's so it's basically creative-led services on the back of our proprietary tools and technology. That's and it's not just Hollywood, but we also have a pretty robust and massively growing emerging markets business. So we work between the East and the West and cover everything in between.
Where's your largest customer base? Your largest market right now? Is that in the U.S.?
So the largest market by way of revenue and financial scale is obviously the U.S.
Okay.
That being said, we have lots of productions that we do for emerging markets, whether they are India or China, and with markets like Korea and beyond starting to become much more real. I think that mix is starting to grow a lot more even from the emerging market size.
A question that I have is, how is the shift to streaming impacting your business? So I want to bring up this chart from your investor deck here. As the money being spent is shifted away from the traditional studios and more into the platforms like Netflix and Amazon and Apple TV, et cetera, how does that impact your business? So there was a lot in your deck about your recurring revenue. So if you could speak to how that shift in capital affects you, and also where that recurring revenue, how that's structured.
So, firstly, we have a deep history with the creative storytellers in the business. So, you can basically, whether they're filmmakers, directors, producers, and the studios, we've been working with them for over 20 years in our history, and doing very, very significant and credible work. The emergence of the streaming platforms basically is an alternative path of distribution. It's basically saying, instead of going to a theatrical window first, we can go direct onto a streaming platform. We can go simultaneously, and that's something that most content creators are now picking to their choice. What is the best way to
right
out that content to the world? So for us, it doesn't really matter in terms of whether you go to the cinema first or you go to the streaming platform first. What it does help do is that because of the emergence of the streaming business model, there's a lot more demand for content. Like, it's not about those 48 weekends a year. It's now a lot bigger in terms of, streaming companies release content on a Monday or on a Thursday, and it's not about getting on a Friday or any of that. So that opens up the universe of how much content is being consumed, and that really helps drive significant tailwinds for us.
Can you explain the recurring revenue thing? So how does the deal structure work? So you'll sign a deal with, like, I don't know, Netflix, for example, and that deal is not for any specific movie, or it is, or it's a multi-year thing. So can you explain that?
So I think, no two deals are the same. But
Right.
That being said, there's one scenario which is basically somebody just saying, here's a minimum guarantee. We know we're going to need X amount of capacity over the next X number of years. And we don't know what we're going to make in 2023 or 2024, but we know we're going to be creating content and we're going to need services. So that's a more simple, straightforward transaction. The other formulation of that is that, if I go back to the older theatrical model, any of the big studios, everybody's got that 12 to 15 distribution slots that they all had in any calendar year. And we always know that they're going to make, if you're making a big, very successful franchise, in all likelihood, there's going to be another one to that. So, for example, we did the very first Venom for Sony, and
Right.
as soon as that became a big hit, and they decided to come back and make the next version of Venom, we were asked to come back on and work on that again. So it sort of builds that link because we obviously work with the studio and the filmmakers in designing the characters, the assets. So it becomes a very easy capability for us to take what's the next phase of that story's journey and bring our services on that. And that's sort of how our connect with either projects or franchises or with studios, sort of rolls from one project to another or from one year to another.
Right.
What's the most you've ever heard of one, production company essentially spending on special effects or CGI for one project?
What I've heard is there have been projects that have gone as high as about 120 to 140 million dollars in just their CGI budgets. That's not. I would also say that's not the ordinary course of business. That's not regular. I think it's important to say that in any of these big franchise or any of these big action extravaganzas you see, visual effects does form to be the largest line item on the budget. So there can be the $100 million projects every once in a while, but there's also it's fair to say that as many projects are made, visual effects continues to be a big portion of that budgetary spend on any piece of content.
I put up a chart here just of your recent fiscal year revenue totals and your guidance out, and of course one of the features of the SPAC process is you're allowed to give numbers this far out in the future. IPOs are not. What is going to drive this top line revenue growth? You guys are coming off a year of $306 million in revenue last year. Obviously the pandemic affected that. You're guiding for $400 million in revenue this year, which is more in line with prior years. But going out 2, 3, 4, 5 years, you're given pretty significant guidance here. So what's driving this growth?
So I think obviously you're seeing numbers which are as late as fiscal year 19, which is March 31 of 19, and that's only going 3 years back. But if you actually see the trajectory of our business in the last 5 or 6 years, we've pretty much tripled the revenue of the business in terms of where we stand today, and that's happened organically without any momentum or crazy momentum that we're seeing being driven by the streaming market reality. As a company, as a business, we've fortunately always had the ability to, we've had more demand than availability, and that's sort of meant that our scalability has not been the challenge in terms of revenue, ability to attract revenue. It's been more about how we build capacity. And this ability to go public and raise capital for growth really helps expand our resource pool and build our capacity up, which is really what that one aspect of it talks about. But primarily, we are seeing, as you put up the slide earlier, we're talking about streamers talking about numbers that, there's going to be over $100 billion of money being spent in the creation of new content almost every year. And those kind of numbers are unseen, unheard before. So what we are still doing is a pretty conservative approach to say, can we kind of double our revenues over the next 3 to 5 years? And that can happen rather organically as we build capacity.
The deal today values your company, I believe, like 11 and 11.5 times EBITDA. How does that compare to the industry? There aren't many other.
So I think that's a great question, and that's something that I feel like is really the opportunity in where we are at. So the fact is that there isn't a real comp existing in terms of a direct comp. There's obviously a lot of companies that are in the streaming space, in the technology space, in the in the content creation space, but there isn't any specific direct comp. And I think the idea of the approach we took here was because this is not a deal where we are all selling out or taking secondaries home. This is really about building for the future of the growth. The idea was to price ourselves in a very what I would call a very safe zone, which actually helps to give us a very fair landing or a safe landing, because the opportunity is really about the future growth and what that brings. And that's sort of, it was not a magic number. It was literally, we always look at ranges, and as you keep performing, and then as you keep growing, the multiple keeps coming down, which is, so if I told you 6 months or 9 months ago, that number would have been, the multiple would have been a little higher. But as we keep delivering better and better numbers, that multiple looks a little bit more compressed, which I think is a great invitation, frankly, to the markets to hopefully give us their thumbs up. And,
right,
and as we go forward and build value, I think there's a tremendous opportunity for everyone.
I guess we'll find out. Namit Malhotra is the chairman and CEO of DNEG, going SPAC. AKIC is your ticker for now. Mr. Malhotra, thank you so much for calling Benzinga Live today.
Thank you.
Good talking to you.
All right. Look, the reason I want to get Namit on the show is, again, this is a company that checks a lot of boxes, right? That there's a lot of like the sexy boxes. Streaming, there's metaverse implications, there's gaming implications. Is it worth the valuation? Well, that's what the market will decide. Right? The market will decide that. I am not someone that is willing to just blindly write off a company just because it decides to go SPAC. Clearly, because I own SoFi. Right. So I think writing off a company because they go SPAC is not the way to do it. But the beauty, look, people go SPAC for a variety of reasons. It's quicker. It's a faster process than the IPO process. The IPO process itself definitely is not perfect. Look, the market will decide as it always does, and that's the beauty of this. So we can debate bullish or bearish till we're blue in the face, but for the moment, growth is out of favor. I guess I would call this a growthy name. It's growthy. It's growthy.
Yeah, I will say the one thing that I like the space because, like we've mentioned, we've seen how much money these big companies, whether it's Apple, Amazon, Netflix, are willing to spend on content. Right, the old adage is true: content is king. So these companies will come in and spend billions and billions of dollars on content. Now, the flip side is that I think a lot of the major studios have in-house, special effects teams, kind of. So it'll be interesting to see how that revenue model that Namit was describing, how that plays out.
And again, there is no, as he was saying, there really is no company like them that's currently public. So there's sort of a industry unto itself, at least in terms of the public market. And
that might give them an advantage that they're able to kind of shop themselves to the different studios, to the different companies, saying like, oh, instead of just having, your team that you have, you guys can hire us for this project and go to all the different studios and do that.
We'll see. That's a company that I will add to. Well, I'm going to wait until the merger closes, and then I'm going to add it to my watch list. Not necessarily to buy, but I'm curious to see how it behaves. How does it trade? Does it trade with the streamers? Does it trade with the video game companies? Does it trade with I don't know. That's what I want to find out. So anyway, I hope you guys like that. We're gonna have a few more guests on throughout the show today. We're gonna have Robert Roy on in about 20 or so minutes ish. We'll have Christian Fromhertz on after that. So save your ticker questions for those two because they're the pros. In the meantime, Aaron, for the last couple of days, I've been trying and forgetting to reference do you remember the stock of the year spreadsheet we did?
Yep.
Yeah, I keep meaning to bring that up and I keep forgetting. So I'm going to do that right now. A few weeks ago, if you're watching our show on January 3rd, we just spontaneously decided to do a contest, and we've closed the contest, obviously, because it would be unfair for people to have a 3-week head start. But we say, hey, what is your stock of the year? Let us know. And the first 3 weeks are telling because almost nobody is doing well. Hey, how's that for a cool camera angle? What's up? Oh my gosh, we're zooming.
We've got a big bounce on Bitcoin right now too. I'm just trying to keep track of everything going on in the market.
Yeah.
Bitcoin is up like 2% over the last hour. We'll do a crypto update soon, but I'm watching Bitcoin right now. What's interesting is Coinbase isn't really, I mean, it's getting a bounce, but it's not really trading as high. I mean, I was expecting after looking at Bitcoin's chart to see Coinbase have a big bounce and haven't really. Where am I looking? Oh, there's the camera.
I don't know where to look either. Don't worry.
There's so many cameras
Oh.
now.
It's not just you. On the Bitcoin front, we did have someone pick Hut 8 mining, and someone else picked Hive blockchain. I just want to share this for 1 second, and we're not going to spend too much time on this. This is our stock of the year spreadsheet, and yeah, you can see it's not great. Let's sort it by here. Look at this. Aaron J is the only person that is up.
What stock was it?
He picked a Vale.
Oh, yeah, they're doing well. Energy, baby.
Energy.
And materials.
Whoever picked Baba is in second place. But look at these returns year to date. We have
I'm like in dead last. Run has been terrible.
Run. We have a Sundial. We have a Genie. We have a SoFi. MSOS was me. That's been horrible. Disney. Mateo. Actually, my dad instructed me to buy some Disney for my mom's account today. I tried to tell him I only wanted to buy 50 shares. He wanted me to buy 100. I said I don't want to do that, and he basically just called me he told me to grow some balls.
That's fair. That's warranted.
So, anyway. Airbnb.
This is a nice segue, though. Once we're finished with this, I do have to.
Well, this is done. The bottom line is we stink so far. That's the bottom line. Just wanted to show you guys this. Wait, what do you want to show us? Sorry. Christian, don't worry. You're not last yet.
Well, I was going to say we're talking about stocks, that have been beaten down. I added 2 stocks to my long-term portfolio today that have been beaten down. These are my 2 big high conviction trades at this point of the year.
Yeah, one of them you've been all over.
Which INST?
Yeah, INST.
That's not even one of them.
Oh shoot! All right.
Although, interestingly enough, you brought that up. INST is green again today, just showing like
choo
some relative strength against the market. Every day it seems like the markets are down 2%. INST it somehow stays in the green. So definitely some strong signs there. But these are 2 stocks. So we've talked a lot about this before, and I don't love trading just off of insider trading. Or I don't love trading off of one thing anytime. Like I like to take all information that's out there into account and then make my decisions. So while taking into account how beaten up these stocks have gotten, and then we talk about selling a lot, insider selling. There's a lot of different reasons to sell. There's really only one reason to buy. I'm going to pull up the site, the page we have on Benzinga where you can actually find this information. Share my screen here. All right, so we can throw some filters on here. I'm just doing from the first of this year, 2022 to 25, 2022. Yeah, search by here. So these are all insider trades, both buys and sells since the beginning of the year. We're going to sort by size. All right, this mortgage trust, 160 billion. That's like a fund or something. That's not really that interesting. Here's the first thing that I find interesting. Asana CEO Dustin Moskovitz adding.
He's been loading up.
Adding 73 million on January 3rd, 68 million on January 21st, 47 million on January 6th. So he's added effectively. Let's do some quick math right here. 73, we'll call that 140. We'll call that let's call it 185. He's added $185 million worth of Asana stock just in the last month alone. Asana, to give you some context on its price action, 52-week high at one point was trading at $145, currently at $50. So this is one that has gotten beaten up even by the tech and growth standards that are out there. I like Asana here. I'm adding it again long term. I'm not saying, hey, if the markets are weak, this can't go down another 10, 20%. Of course it can. It can go from $50 to 40 to 35. But do I think that Asana will be higher than $50 when it's time for me to, it's my Roth IRA. It's very long term.
I have a thing about Asana and Dustin Moskowitz real fast, and I don't have any data to support this.
Okay.
I'm looking at what you're sharing on the screen right now, which is very, very helpful. But I don't know if I remember a CEO buying his own company's stock as aggressively as Dustin Moskowitz has bought Asana in the last year. Let me just show you. I'm going to go into Benzinga Pro and just show you just how many transactions he has made. And is that a bullish signal? Sure. But I think he's an outlier. I think very, very few company executives. I'm in a SEC filing newsfeed, and I just searched for ASAN. Look at the sheer number of buys, and let's just scroll, and we can look together. So we've got 4 in January. I'm sorry, 5 in January. And let's go back to December. 1, 2, 3, 4. 4 in December. In November, we've got 1. Looks like just the 1 in November. Let's go back to October. 2 in October. Let's go back to September. 2 in September. Let's go back to August. None in August. He bought more. He bought July. He bought in June. How many in June? 3 in June? 4 in June?
But here's what I think.
He has been buying 5 in June. How many buys did this guy make? He has been buying so much. And that's fine. That's only one reason to buy, because you're bullish your company. He bought on the way up, and he's buying on the way down as well. I think if you were to measure the quantity of a CEO's insider buys, Dustin Moskowitz would be an outlier on the spectrum. I don't know of another CEO that is buying as aggressively as he has.
I think a CEO knows that, hey, if I buy some stock right now, it's a good look for the stock, right? People like myself, I like seeing when insiders are buying. And I hear you. I would rather see, insiders across the board buying, showing that, hey, all the people with the most knowledge about this company are bullish for the company's future. But to me, this isn't some PR play by Dustin. I mean,
Oh no, I'm not accusing him of trying to manipulate his stock or anything like that.
No, I'm just saying that at that point with the dollar amounts that you're playing with, I mean, think about it. 4 of these ads have been in January of this year amid this market sell-off. Tech is so weak. He's not a dumb guy. I don't think he's throwing $200 million down if he thinks the stock's going to go down another 50%. Do I think that the stock, like I said, can go down another 10, 20% if the market continues to be weak? Sure. That's why I'm adding it to my long-term portfolio. I'm not buying short-term call options on this or anything.
Yeah.
But similarly, another stock that I like also has had some insider buying, and that's DocuSign. Daniel Springer, president and CEO, has added about $10 million worth of DocuSign shares over the past, we'll call it 2 months.
By the way, do you want to share what tool you're using? Do you want to talk about that for a second?
Yeah, so right now I'm on our Benzinga Insider Trades. Honestly, I just found it by Googling Benzinga Insider Trades. But we do have a new API coming out in 2022 that is going to be an Insider Trades API. I'm going to go ahead and share a link in the chat that you can check out some of those APIs because they're very great tools for finding stocks like this. DocuSign, I'll talk a little bit more about my bull case on that. You can see on here as well, a lot of this selling is dating back to 2019. There really hasn't been a lot of selling in the past year and a half anyway. But here, let me grab this link for you guys on the API so you can check that out. If you guys have any questions on the APIs, please reach out to us, shows@benzinga.com, and we'll get you in touch with the right people at Benzinga.
Something to do in a couple of weeks here when we get to the barrage of 13F filings for the end of the year is we can look at the stocks that were most bought and sold among the largest institutional hedge funds last quarter. But the insider transactions thing is more of a real time.
Right, because they have to file the.
Right.
With
If you
the
are
SEC filing.
if you own what is it, more than 10%?
Yeah, if you're a 10% owner.
Yeah, you need to file anytime there is a change of own, if you buy or sell, basically, is what it comes down to. So, okay, so good call outs there. Asana and DocuSign. I just before we forgot, on the Microsoft call options note, Aaron, just for your own awareness, I was looking at the post earnings move in Microsoft.
Okay.
And more often than not, Microsoft is higher the day after its earnings report. So
I might have already missed the boat if Microsoft got a little bounce here, honestly, because they were already expensive.
Well, I'm glad you brought up your pro, because I'm going to my pro because I'm keeping.
Yeah, I mean, like I probably mentioned that David was still on, so that was before noon. It looks like Microsoft has bounced a couple bucks since then. We'll do another looking on those, but let me go back to DocuSign real quick.
Okay.
So DocuSign, I mean, if you're unfamiliar with this stock, basically the story is that they created the service that allows you to electronically sign contracts.
Great service. Legally
Binding. And their moat is just incredible. I mean, it doesn't matter who you are. Everyone uses DocuSign. It's in the business world, it's become a verb. Hey, can you DocuSign this? Just like Google has entered our language, entered our lexicon. But going back to before COVID, right? This is one of those companies that gets obviously pushed forward during COVID. More people had to electronically sign contracts. You're not doing as much business in person. So rightfully so, the stock, skyrocketed. But after this recent drawdown, and we had a huge earnings miss last quarter, or in November for Q3 of 2021, where the stock went down like 30% after the earnings or something crazy. And like we talked about with Snap and Netflix, the stocks often continue to trade lower off of that earnings report. They don't typically fill that gap right back up. But right now we're at $116 a share. We were at like $90 a share pre-COVID. We're almost at our pre-COVID levels in DocuSign for a company that has grown a lot because of the COVID-19 pandemic. If we go to our financials here in Benzinga Pro, I'm looking at annual right now, and what we can see is that in 2018 to 2019, you had about 20% growth in gross profit, and that was before COVID. So this was a company that's growing before COVID. You can see how much revenue in 2020, and then so we've essentially doubled our revenue in 2 years, and the stock is only trading up about 20% from where it was pre-COVID, a little bit more.
Yeah, I'm not sure what they've said going forward though, as far as the future growth. The financial ratios would tell you kind of a mixed bag, because on the one hand you see a forward PE of 51. You say 51, that's pretty high. The S&P is like in the 20s. It is a little bit lower compared to the industry average, which is something. The industry average is in the 70s, and so DocuSign's at 51, so it's a little bit cheaper than some of its peers. It's not exactly saying a whole lot, because some of its peers are very expensive. It's got a price to sales of 12. That's a lot. That's a pretty high price to sales ratio. The S&P 500 average, I think, is like 4. So again, it's technology. It deserves a higher price to sales. I'm not saying it doesn't. 12 is not off the charts. But it's a little high. But to Aaron's point, when you're looking at companies that are super beaten down, and do you want to buy the dip, and you want to look for, and everyone says, oh, you buy fundamentally strong companies. Well, what does that really mean? Take a look at the ratios, see how they compare to other companies like it, or the S&P or the NASDAQ. Take a look at the balance sheet. Take a look at the revenue. Is it growing year over year? And what about the bottom line? Is the bottom line growing year over year? This is high level, surface level analysis. Nothing too crazy. But that's the kind of analysis that we're talking about, right? The kind of analysis that takes, frankly, a couple of minutes. You can look at a couple of numbers and get a feel for the company, right? Do you want to be buying a company like like Peloton, where the revenues are they're decreasing, right? Or do you want to be buying a company that their revenues are not decreasing? And also do the eye test, right? Like, think about the product. Is the product easy to copy? Are there lots of other competitors out there? Do they have a moat, right? DocuSign has competitors. Adobe probably, Aaron, off the top of my head. But they've got a lot of this market to themselves. I don't have any data to back that up, but I'm just like going off of Benzinga's own experience and like what we use and what other people that we interact with use. We all use DocuSign. As opposed to Peloton, they're competing with Nautilus. They're competing with gyms. They're competing with dozens of other. It's an exercise bike, right? How easy is the service to copy? Zoom, right? Dealing with competition from Cisco, dealing with competition from Microsoft. So like those are the kind of questions that you should ask yourself when you're looking at buying the dip in a high growth.
So here's what I think is interesting, because I'm willing to pay more of a premium on a company like DocuSign or like Asana that I think has a better chance of really compounding its revenue, making a lot more money in the next 3 years than it does today. But this is what I think is crazy right now with how, I understand the valuations got a little out of hand, but if you take into account how cheap money was to borrow, it really it makes it a lot more reasonable, a lot of the valuations of what we saw at some of the tech companies when the markets were kind of at all-time highs. But right now, after this drawdown, I mean, Google's PE is 25. Let's put that into perspective.
Google's PE is 25?
Yeah, let's look at Coca-Cola.
Dude, that's a value.
Let's look at Coca-Cola.
Shit,
Coca-Cola's is 29. So what this is saying is that the market right now is saying that it's going to take 29 years, essentially, if Coke maintains its current revenue and everything to make your money back, and Google 25. It's essentially saying it's expecting Coke to grow more, to compound its revenue more than Google, which is just insane to me. If I'm going to bet on Google or Coca-Cola to be making more money in 3 years than it's doing right now, it's easy. That's an easy choice, and it's Google. So the fact that Google's PE is down below 30, Microsoft, I mentioned that with David Green, down to 33. Microsoft's is currently lower than Costco's. I don't know. I mean, we're going to see.
But Costco's has also come up a lot. So
But either way, I mean, Costco's is a value. Costco's supposed to be a value stock that's got a higher PE.
It's supposed to be. I don't know if it still is, but
right.
Yeah, but I like the Google Coke thing. So that's unbelievable. And I know Coke has just made all-time highs. Yeah, I'd rather own Google than own Coke. Straight up, right?
Right.
I think most people would.
So Asana, DocuSign are my two big plays right here. Google, if you don't have a position in Google, I think now's a great time to start adding some. I mean, Google has probably the biggest moat in the world in terms of what Google does. No one.
They own the internet.
No one else. I mean, yeah, Amazon. You could argue. I guess just from a cloud computing competition like Amazon, Microsoft, maybe, but Google really is very differentiated in what it does, the services that it provides. Not going anywhere. Doesn't need to be said.
Does not need to be said.
So Google right now is a good buy.
Yeah, I'm for that. I'm about that. On that note, though, since we're looking at Google, can we just look at? Let me pull up my pro. Let me just look at the other FANGs real fast. So we got Microsoft, which we talked about today. They're what do the ratios say? PE a little more than Google's, 32. But that's come down dramatically. And again, it's Microsoft. It's a cash machine. Okay, so we got a 32 PE on Microsoft, forward PE, price to sales of 12, which again seems low for a technology company.
Oh my god.
What?
Facebook's price to sales is 8.
Apple. Facebook freaks me out though for other reasons that have nothing to do with the valuation.
Yeah, Apple's price to sales 7.5.
What am I on? I'm on. This is Apple. Forward P of 28 and a price to sales. Man, that's reasonable. People whenever Apple goes down, people always forget that Apple is the most valuable company in the world for a reason. For a reason. Well, let's just do Amazon quickly here, and then we'll bring on Robert Ray. Amazon's a little bit more expensive, right? It's got that 4P of 45. It's a little bit more expensive.
Yeah, I think I'd rather buy Google, Apple here than Amazon.
Let's just have some fun with charts for a minute. Let's just oh, come on. Let's just compare them. You said Google, Amazon, and what? Microsoft?
I would rather buy those three over Amazon right now. Google, Facebook, Apple.
Facebook. All right, let's compare. The thing is, like, they do all trade together. More, no, actually, I guess not. This is just arbitrarily the time frame I picked. I wasn't trying to make a point by going back to last May, but let's just go off this chart for a second. You can see that Microsoft and Google have been the best performers of this group. Look at Amazon. Wow. Down 14% since May of last year. Let's just zoom in. Again, you can make this chart say whatever you want if you play with the time horizon, right? Just taking a gander, just to see how the prices change. Look at Microsoft. Look at Google. Yeah, Amazon has been the laggard this entire time. Very interesting. Facebook I wouldn't own because it freaks me out for like the antitrust stuff. I'm like a little bit more concerned about them than I would be about everyone else. But Google, Microsoft, there are many, many worse stocks to buy than those two. That's the point here I think we're trying to make. Yeah, and there's Jay Rice has a great point in the chat. Star Smoke, there are far worse things you could do with your money than buy the technology ETF. I'm not saying buy it, but there are worse things to do with that. I've heard far worse ideas on this show from myself and Aaron and others.
What's my worst idea you've heard on this show?
I don't remember.
You don't have to say.
I don't even remember. I've had some bad ideas as well. We all have bad ideas. Let me just catch up on the chat, see if I missed anything. And we didn't include NVIDIA in this conversation.
Oh my God. I sold some of my NVIDIA and my, you know, it was so funny. So yesterday, like right before we started the show at like 11:30 a.m. Eastern, the markets were down about 3.5–4%.
Yep.
And I was looking at my Roth IRA, which I don't check all that often. The last time I checked
That's good on you, man.
Last time I checked it a month ago was up about 20% from the previous January when I opened it. So it's been around for about a year. I was up 20%, which was actually a little less than the market. Like if I had just bought S&P 5 SPY, I would have been like 27%. Anyway, neither here nor there. I checked it for the first time in a while yesterday. It was down from the last January.
Oh, Jesus.
Because NVIDIA and Apple had been down, like 12% over the last. It wasn't down. It was like barely in the red, pretty flat. I trimmed some of my NVIDIA position because I was like, shoot, I'm still up like 80% on my position on this. I can't just like keep holding everything until it keeps going down, like whatever.
Well, you can.
I can't. I trimmed my position. I knew in the back of my head, I was like, I'm going to regret this. Like NVIDIA is going to be high or whatever. Then, of course, the markets rally. NVIDIA finishes in the green. And then, like, the first thing that I see last night was a report from, I forget if it was from, like, Bloomberg or whatever, but it was, like, trade-off largely induced by retail sellers. And I was like, yep, that was me.
I saw what you're referring to as well. That was an article from Bloomberg citing a note from a strategist at JP Morgan. As soon as I saw that, I was immediately skeptical because I'm not sure how you measure that. You can go look at order size, but you'd have to go look at the time and sales for how many stocks. I believe there was no explanation in that article where that data came from. It came from JP Morgan, but beyond that, that's all we know. Where did JP Morgan get that data? It didn't say. So I'm highly skeptical of that claim that yesterday's sell-off was retail traders panicking before the rally.
All right, I didn't look into. I pulled the classic. I just read the headline.
Yeah.
So I saw, and this is what we talked about the other day, just because it's from a reputable outlet doesn't mean you shouldn't then verify the sources within that article. But I'll look into that more. But let's go ahead and bring Robert Roy on the show. Robert Roy from Wealth Builders HQ joins us every other Tuesday now. Is it every other? Every
He'll
Tuesday?
be on next week, starting every other Tuesday.
Every
So this
Tuesday.
week, next week, and then every other from there on out.
We'll play it by ear.
Let's give Robert a special intro. We don't give him a special intro hardly enough. Oh, there he is.
How we doing, guys?
What's up, Rob?
How's everything?
Well, I'm confused.
Why?
Why? We go up, we go down, we go up, we
Oh.
go down. I don't
thought
know
you
what
meant
to
where I
make
was
of it.
talking to you from.
I don't know what to make of anything here.
Listen, this is what we need to have happen. Bottom line, we need this kind of shakiness, craziness. We need capitulation kicking in. The only way we're going to get through this kind of up down that we have is we need the strong down. We need the bear market. We need a little bit of suffering. We need all the looky-loos who throw their hands up and say, "I quit, uncle. That's it. I'm done," and walk away. And then and only then we're going to see us start to climb. And then we got the opportunity for that nice gain. But we can't have these 1,000-point down and up days. That doesn't help us any. It just doesn't help at all. It just makes it very difficult for trading when you're bearish in the morning and bullish in the afternoon by that kind of move. It's tough.
It is tough. Earlier, we had a former New York Stock Exchange trader say you have to be a magician to be able to trade in this market. I mean, there's no, I guess with that said, we've been in kind of a overall downtrend the past like 2 weeks. So if every time you've kind of sold the rip, you're probably in good shape right now. But outside of that, I don't know any strategies that seem to be working on a day in, day out basis.
So it's day trading, and that's what it really comes down to. It's shortening up the time frame, bringing it down to a day trading level, and not holding for too long overnight. And I heard you mention before IRA strategies. I can tell you the best IRA strategy there ever will be to trade, and it crushes it if you do it right. And if the market crashes, you'll do pretty good.
Yep. All right. What stocks are you watching right now, Rob?
So right now we're looking at Alibaba. So let me go ahead and bring my charts up.
Yep. I'll get them pulled up.
So we've got Alibaba as one. We've got a nice fib drawn on Alibaba. Right now it's down $1.85 on the day or so. I'd love to see it make it back up to this fib line first, which is 123.15, and fail off there. Keep in mind there's earnings coming up, but we're going to day trade it. That's all I'm looking to do. We've got the opportunity. We can see this move in a 2-day period, about $13 or so. So 15, we can make this entire move in 2 days, right? But I'm going to day trade it. If we could push up and hit into that 123 and roll over, I'll look at a bearish entry with buying a put, and there'll be this week's puts that we're going to be looking to buy, right? So overall, I like it a lot on Alibaba.
Yeah, so I mean, are you talking about just for a swing trade? Like, what's your price target on the upside? Because I like Baba right here too, but I'm looking at it more on a long-term investment.
Oh, no, I'm looking at it at short term. I'm looking for it to move up to that level and then drop.
Okay,
I want to see it go to 123 and fail, and we're going to buy put options on it.
Oh, okay. So you're not playing on the upside. You're waiting for it to get up there, and then you're going to play it on the downside?
I'm not playing anything on the upside right now per se, unless there may be newsy items that I will, but overall, like what did we do today? We did American Express on the upside today with a spread, which we're up about 40 cents right now on that spread, right? And I needed to be up $40. I needed $200 to do it. So it's about 20% rate of return for the day. Not too shabby. All right. So no, I'm not looking at anything. I track 20 stocks day in and day out. Every day I assign them a bias. There are 5 different biases. There's bullish neutral. There's neutral, bearish, and bearish neutral. So we have 5 biases. Okay. Of those 5 biases, normally you'll get a mix between all the stocks. You'll have some of each. When I did this on Sunday for Monday, when I did the update over the weekend, 100% were all bearish. The same bias, all bearish was the bias on there. So we're strong. It's strong bull. Bear. Why fight that the downside move of the markets and try to trade the upside?
Yeah, and the other benefit you get by playing this way is that, if you buy puts on a rip, right? BABA rips up to 123. You buy the puts. When it drops, if the overall market is dropping too, the VIX is going to be increasing, which will then make your contracts worth even more.
Correct. The volatility index kicks in there. It artificially inflates the price, and then you deal with something that's called a volatility flip. As the market's moving up, the call options are increasing in value and overvalue as well. But now once you get to that resistance and roll over, the market makers flip that volatility around to puts. You could see a $6 put turn into $7.5 with a 25-cent move on the stock price, just in that small drop, because it hit a key level, that resistance level, and finally gave way and has failed. And you're seeing the VIX increase value exponentially.
Got it. All right, so any other setups you're seeing right now that you like outside of BABA? I'm also going to ask the chat if you guys got any tickers, any stocks you're watching today. Go ahead and drop them in the chat. If we have time, we'll bring them up with Rob, get his take on them, pull up the charts, all that jazz.
Facebook is the next one, right? They had a great bounce yesterday off this 300 level, break the 300, retest and fail, and we're looking at about 292 as our next downside target. So the moving average is a little far away from me. So if I were grading this, I would give it a B grade. It's still a good setup, but I would prefer that 8 moving average to be there. But because of such a massive move we've seen in the last couple of days, it's not going to be very common that 8's hanging around where the price is sitting at right now. So get under the 300, retest the 300, fail off the 300, and 292 is your target. It's a good setup. And if you take it off of the 300 and you're wrong and it goes up, I minimize my risk greatly because I took it at a key level. I took it at a resistance level. So if it starts to drop and it pops up, I've got a couple of dollars of risk, unlike trying to take it, somewhere in the middle here where my stop is still going to be up above that 317 level if I were up here. So Facebook is definitely another one.
I'm seeing in the chat, we've got Tesla, of course.
Well, they've got earnings coming up, right?
Yeah, Thursday, I believe.
So we got to be very careful with them. You can still day trade them, but we want to be careful with them. So where are we at? We're sitting at 908. If you see my fib lines here, Aaron, we've got 876 and 946, right? So those two levels, that's the key levels I'm looking for. We're in between right now. So I go back to position number 1 in the chair. I'm sitting back here like this, and I'm going to watch it. The only thing I would do differently on a Tesla is I would look at pivot points for a potential intraday setup. But even today, look at its candle. It's tiny. It's in the middle. Bulls and bears really don't know what to do with it right now, and it's just hanging out. So for me, I would pass.
Got it. All right. Yeah, and we've got a couple big companies reporting this week. We have Microsoft after the close today. I believe Apple tomorrow.
Amazon's coming up, right?
I believe so. Or sorry, Apple's actually on Thursday, I believe, with Tesla. Let's check
next week. Yeah, I don't have my candidates in front of me. My
Amazon's not. Yeah, Amazon's not till next week. But
next week.
Let's take a look at Microsoft. This is one we were looking at earlier today.
All right. So on Mr. Softy, I mean, look at that. Look at that move yesterday inside of that level. We've completely violated the major components of the fib. We broke down through the 764. We got down near the 882, which would be about where my mouse is now, the horizontal line. And actually, let me just add that in. Let's put an 882 level in. We don't normally use that until we get there. It's called a fibit. So now what are we looking at? 287, break below, hit, and fail is the entry. But their earnings are, is it tonight?
Microsoft? Yep, tonight.
Okay, so the way to trade Microsoft is to not trade Microsoft. And here's what I mean by that, Aaron. What you should be looking at tonight is the NQ, which is the futures of the NASDAQ. Watch as Microsoft's announcement comes out and the NQ will move. You can play this announcement in the post-market by trading the futures versus trying to trade the option or the stock itself. I'll wait till the pieces fall tomorrow and I'll pick it up tomorrow.
There you go. Yeah, I mean, Yeah, that's always a safer way to do it, right? Wait till after the earnings. We're gonna know more about what Microsoft's outlook is for the next quarter, what their guidance looks like, all of that.
Absolutely. And on top of that, the way you talked about VIX right in the beginning of the show today with me, you're going to have the same volatility flip once the earnings are out. What compelling reason is there for the stock to go, period, up or down? The earnings is the compelling reason. Once that earnings are gone, you could see complete deflation of that option, which is automatically inflated as we get into the earnings season.
Got it. Do you want? I don't think we've done this yet, or at least since you've been on, Rob. Can we just pull up the SPY chart real quick and take a look at the overall markets and see kind of what our fib levels are saying there?
Yeah, absolutely. So we've violated on this zero line yesterday, on the one line yesterday. So tonight, I have a training that I do each Tuesday night. I will redraw these for my team, for my students. We'll kind of do it here. And let's redraw at this point, and you guys can see what it's going to be. And I'll put these on the, because I'm using a different computer, but I'll put them on the same way. So we've got 421 and 433. That's 12 points, 16. We don't need to fib it in there. Let's just see down here, 407. That gives me 16 points. No. All right. So we're good. So I don't need to add any additional lines in there. So right now, look at yesterday, and I drew this off of because of yesterday's move. Look at what happened yesterday, right? We pushed all the way down to that 420 and we came back up and closed near that 236. Today we opened up right at the 236. If you don't know what 236 represents, write it down. It means hesitation. Hesitation. It pushed up to the 236 and failed. Aaron, that's my trade. That's where I entered the trade, is right there. As we pushed up into that level, let me zoom in on it. As we pushed up in here, right? We opened here. Right? We opened here, we ran up, we failed. If that failure brought us into a retest and a drop, that would be the entry for me right there off of that level.
Entry, like you're buying down there?
So when I talk entry, my bad. I need to clarify it, as I am just so accustomed to talking options and expecting that the person I'm talking to can read my mind, like this Vulcan mind thing. We'd be buying put options on the SPY.
So essentially any bounce right now, you're looking to buy, well, not any bounce, but if the bounce hits your levels, you're looking to buy puts on those.
Correct. Again, there's very little that we have calls on, any kind of call options or bearish trade on. We've got an Adobe trade that we entered at 533, and we took 2 exits so far, and our last exit was at 488. That's a $45 move so far on Adobe, right? It's one of the few swing trades we've done.
One of the few stocks yesterday that looked good even in the morning. I mean, it was performing well yesterday all day. It wasn't one of those that was down 4% and then came back.
Right, but as a trader, I still see, if you look at our moving averages, Aaron, right? We've got the 8, which is my pink line, is on the bottom. The green is in the middle, that's the 21, and the brown is the 55. These are all fib levels, right? Fibonacci levels. And you could see that the moving averages were still spreading out between the 21 and 55, tightening a little bit on the 8 and 21, but overall we're pushing down. So what's happening? Our tops are coming down, our bottoms are holding on a fib line and a 100-point level, that 500-point level. So what do we have there? We have a descending triangle setting up in there right now, right? Between the moving averages and the fib line with a confluence of the 100-point level, we've got a descending triangle. We broke it yesterday, right? But we've got a nice opportunity to break to the downside, right? And there's that 485 we could hit all over again. And from there, we're looking at 453 as our next downside target.
Got it. Anything else on the watch list right now?
Home Depot. So just as an FYI, every one of these I'm looking bearish, right? Look at Home Depot. We came down yesterday, we pulled back up. Look at today, and we pushed right into the fib line, and we failed. There's the opportunity for entry right there. So we missed it this morning. If it happens again tomorrow, we get that rollover off of that 361 level. We've got 344 as our downside target on Home Depot. Plenty of opportunity. Earnings are way out, so we've got plenty of opportunity here on a Home Depot. So I like them a lot. Maybe this will lower price on lumber with as much wood as I buy there. For sure. I wouldn't mind seeing prices go down.
Yeah, I know one of the stocks I'm looking. I mean, Lowe's and Home Depot tend to trade pretty similarly, but I was looking at Lowe's for 2022 definitely. Let me just catch up with the chat real quick. Hurt Scrambler wants to look at Apple.
All right, Apple. And the rain came down, right? So we got earnings coming up shortly, as we talked about before. We've given everything back on our fib. I don't want to redraw yet at this point. We don't have enough of a bounce for me to want to redraw yet. Let's see. So we're going to work off of old fib levels. So you see that breakthrough yesterday we had? Look where it came down to. See the previous fib line right here? We got, not right there, but we got close to that level, which is our catalyst yesterday. With earnings coming out, guys, this will be the number one reason, the number one way that I trade the NQ is by trading Apple when the announcement comes out. The announcement will come out after the market closes. The futures are still open, so we could trade the futures on the announcement of Apple. And I'll step back and see what it does after that. But its bias right now is bearish. Moving averages are bearish. Everything is giving me a bearish connotation. So could you find a day where it bounces and you get a bullish trade today? You could, but I said this 2 weeks ago, maybe 3 weeks ago here. 70 to 80% of all stocks move with the S&P 500. So let's trade the direction of the S&P 500. Go look at the advanced decliners and see what percentage are up and down each day compared to the S&P. Now, granted, if the S&P is up 2, down 3, you're going to be off on that, right? You may not hit it that way. But for the most part, you get a decent move up or down. Most of your stocks will be moving in that direction. So I'll wait for a better move off of here.
There you go. There you have it. Let's check in. Yeah, I mean, I feel like everything is going to be pretty similar right now. We're looking for puts to buy on any bounces because that's the overall trend, right?
Right. United Healthcare, UNH, right? Same scenario. We're kind of in the middle right now. Pull back up to the 456 and fail, and 446 is my next target. I mean, my system is simple. Listen, guys, people say you must have been really smart in school. Guys, I was a C student. I couldn't work for other people because I didn't like having a boss, right? Hated it. Started my own company. And, you know, that was my own business. That was the only way that I was able to survive because working for someone else didn't work for me. But I'm not a brainiac. I hire smart people that are much better than I am at things that I don't need, that I don't know. When it comes to trading the market, I know if you will just follow a very simple set of rules, you've got the best opportunity to be successful. Don't overcomplicate this with 37 technical indicators and you buy these black boxes that people create. You know, those black boxes work for 6 months and then they're done, right? This system works if you'll follow it. If I don't like what it's saying to me, I will not force the trade. It makes no sense for me to jump in and force it. I'm not going to do it.
There you have it. Let's see. Any other good?
United Healthcare, we started looking at that. Oh, no, we did.
Yeah, let's look at that.
We got United Healthcare there. We did that one. So pull the 456, drop to 446. Chipotle. Oh, I don't want to.
CMG.
CMG, yep. I just hit the C before I hit the S to bring up my symbol grid. So Chipotle, again, earnings coming up, but look at today, guys. I mean, I can't explain it any better, right? If we look at today, let's go look at 1400 on, let's go look intraday at TradeStation at 1400. Come on. All right. CMG. All right, let's go ahead and snap a horizontal line at 1400. Close enough. 1399.90. You guys able to see that at home? I sure hope so. We gapped down on the open. We ran up and closed at the fib level, and we failed. That right there, Aaron, was your entry. And in 10 minutes, you go from 1400 down to 1375 or so in 10 minutes. Right?
Yeah.
That's how powerful these fib levels are. If you will just wait for the right setup, you've got the best opportunity. Guys, this January is... Sorry, go ahead.
I was just gonna say I love these fib levels. Like they bounce off of them so often, hit them. I mean, there are a million different strategies, like you said, Rob, that people will try to teach you, try to sell you. You got to find something that's simple, repeatable, that really allows you to create a system that works for yourself.
Right. Shelly, I love your comment there. Why is Rob shouting at me? I get it. It's like the preacher at church, right? He's talking right at you. It's a lot of work to get the dedication and the commitment of being able to do this. But once you get it down, guys, it's second nature. It's hitting enter. That's all it is. Do I have trades go against me? All the time. Absolutely all the time. But this year, we've crushed it. We're up a couple 100% in the first 3 weeks in January in one of our accounts. And one of our tools that we use, our power option plays.
And where can folks find more from you?
Guys, if you go to tradinglikeaboss.com, I don't know if we've got it open here. I came in late.
Trading like a boss.
Trading like a boss. You want to know how I use fibs, guys? All of these trainings are free, by the way. Okay. Fibonacci's today's power indicators, a 3-part training series. It's all free, right? Trade with Rob. I send updates out every week of trades with one strategy, one very simple fib strategy called the zero line breakout. Power hours of free training we do every week on Zoom. We do it here on YouTube as well, but we do it every week on Zoom. And it's an hour of nothing more than candidates. We look at the markets, we look at the candidates, we look at what's going on, the Fed, all that stuff as the analysis, right? So we do extremely well with it.
All righty, tradinglikeaboss.com. I'm going to go ahead and post that link in the chat.
Post it.
Rob,
Post it.
look forward to having you on next week. Till then, happy trading.
Excellent. Hey, guys, take care. Have a good one.
All
You
right.
as well.
All right.
You know, we have not done today is we have not done a crypto update.
Yeah, you are correct.
Should we do a quick crypto update? Look at the heat map.
I'm watching Bitcoin. I mean, I'm always watching Bitcoin. But yeah, let's look at the heat map.
All right.
I don't know what it'll look like right now.
Well,
my guess is a mixed bag.
We about
Some
to
red,
find
some
out.
green.
About to find out. I do want to add that this heat map is based on a rolling 24-hour time frame, so it's not going to be necessarily the same as what you would see on a given chart. But we got mostly green. Aaron, you
There we go.
were kind of right.
I was on it. I was expecting more red.
There we go. Look at that. BTC up 5%. And same with Ethereum, up 5% in the last 24 hours. What jumps out to me here? Cardano lagging. Look at Solana. You'll love to see it. Let's get it back above 100, Solana. You can do it. I know you can. Terra is your laggard. Down 16% in the last week, 36% in the last month, 2% in the last day.
Do we have a place we can check the live volume of Bitcoin being traded, bought, sold?
We would have to look at each individual exchange.
Does someone know? Shelly, it sounds like something you'd know. How do I check the relative volume of Bitcoin? Because I'd assume it's up right now, the relative volume.
Let
me just Google.
Could we look at? We could look at the futures. No, let's not do the futures. I don't know. You have to look at coin. You can go maybe CoinMarketCap has that information. Come on, I'm not thinking. CoinMarketCap has that information. Can you tell us, Aaron?
Oh, Shelly said in the chart. That's right. Probably if I pull it up on TradingView, we can just look at the volume bar. Let's see. How do I get it to pop up? I don't see the volume bar on TradingView looking at it. Go to TradingView for chart. Launch full chart view. No, all right, now I see it. All right, never mind. Volume today is not looking that great. Yesterday, pretty big volume bar. We had that kind of flash crash in December that brought us down. I'm seeing the candle right at 42 and a big volume bar that day. I was expecting more people going out there and buying Bitcoin today.
I mean, they are. the buy the dip has happened here. part of me, I'm having a really hard time getting a feel for like the mood out there. I think, to your point about people wanting to come buy the dip, I think people are spooked. I don't have any rhyme or reason for why I think that. I just feel like I saw some big influencers post about how they sold everything, and I think that's a bad idea, to be clear. I'm having a hard time gauging the mood out there, whether it's in crypto or stocks. Thank you, Tim. I appreciate that. Thank you, Roy. Roy says go to TradingView. You can do that as well. Anyway, here's your heat map for the day in crypto land. If you want some free Bitcoin, check out the Voyager app. All you gotta do is create an account, fund your account with $100, make a trade, use the offer code ZING, and they will send you some free BTC. Check it out right there. Keeping an eye on the market as we are continuing to do that throughout the day here. Let's bring up my Benzinga Pro. I'm going to get the screen share. I'm going to bring up my watch list. I'm going to look at what we're doing. Let's go to the watch list. Let's bring it up on the screen. There's the Pro. Here's the watch list. Market. Yep, still firmly in the red. Let's go look at some individual things here very quickly, and then we'll bring on Christian Fromhertz to get his thoughts on what's going on here. So, hey, at least today, yeah, we're down, but you know what else we are? We're like calm. It's orderly. That's the key word. That's what they say on the floor, right? It's orderly. It's orderly selling. Yesterday was not orderly at all. So, you know, we've been quiet since the open. That's a gauge here. Yes, we're down, but we're not. No one's freaking out. SPY, kind of the same thing. Russell is my indicator for fear, other than the VIX. Russell, same thing. Quiet, right? Just consolidating from the open. You can see that just by looking at that guy right there.
So what are the odds you think we close in the green today?
Well, what would that take? So for the Russell, wait, before I answer that, I don't actually know what this number is referring to. Is this referring to the open or yesterday's close? We're down 4 points. That's referring to what was today's open. So that's referring to today's open 190. No, it's referring to the close because we closed at 201. All right, so you asked me like how do I feel about the Russell closing at 201 here? Because that's yesterday's close. That would mean we're flat. Yeah. After yesterday, anything is possible for sure.
That's what I'm saying. Because if you would have asked me yesterday at this time, are we going to close in the green? I would have said no way, Jose.
Right.
But
let me say this: if we don't see a rally before 3:30, then it ain't coming today. That's my hot take. I don't even know how hot that is. If you don't see a rally before 3:30, it ain't coming. Because look at yesterday. The bottom came actually while we were on this show. The bottom came up for the day came like 12:30, 12:45. So don't expect the end of the day.
And then we can also always check in on how Bitcoin's doing as kind of a leading indicator for the rest of the
It's true.
Markets.
It's true.
And Bitcoin's doing all right now. So right now, Bitcoin's at around 37,300. 373, we'll call it flat.
Okay, let's call it that.
If we get up to like 38,000 on Bitcoin, so up another $700, that's when I think we'll really see some rallies out there.
Let's bring on our next guest and get his thoughts on yesterday, get his thoughts on today. Christian Fromhertz, he runs the Tribeca Trade Group. He's on Twitter at @CFromhertz. He's an amazing, amazing follow. And you know what? Let's give Christian the special intro too. Everyone gets the special intro today. C. Fromhertz, what's up, man?
Hey, what's going on? I didn't know I was going to be getting a special intro. Had I known, I don't know what I would have done, but thank you for the special intro.
You've got the Wall Street bro vest game going on today.
Yeah, I got that. Yeah, well, you know, after yesterday, yeah, you got to kind of change it up a little bit and with the vest. Well, it's a little cold here in New York City, so it's not a fashion statement. It's a little cold, so
got it. I would
how
love
you guys
to
doing
get your,
today?
we're doing okay. We're doing okay. I just want to start with backing up to yesterday here. If we can rewind the clock back. Tell us about your day. Tell us about your morning. Tell us how you approached all that yesterday. And you can share your screen if you want.
Oh, okay. Well, I did share a nice picture of a movie that probably you don't know of, but it was a popular movie back in the day. Chevy Chase was popular, and it's one of my favorite like 80s movies, and it's Spies Like Us, and a picture of them.
I've heard of it. I've not seen it. But I'll have you know, I've seen a lot of old movies. Like, I've seen the original Matrix.
That's funny.
Anyway,
the original Matrix? That's what you're...
Anyway, what was the... here, I'll bring it
All
up.
right, let me share my screen. Let me share my screen, and then we'll get going here. Share screen. Share screen.
I've seen all the old movies. I've seen Usual Suspects, old movie. I've seen Gladiator, old movie. Anyway.
That's not an old... Come on.
Okay.
So so this is what yesterday kind of felt like. So this is Spies Like Us, and by the end of the day, I think that now it was nice the way that we recovered. But yes, I'll stop joking around. And but yes, that's kind of what it felt like. And sometimes when we have days where the VIX really kind of shoots up like it did, no problem, like just going. You started to look yesterday in the VIX. Might as well bring that chart up. Yeah. But when you start like just going from handle to handle where it's like, oh, geez, 30, 31, 32, 33, 34. And you just kind of like, geez, where is this going to? And it's scary when you're kind of in the moment, to say, oh, geez, 34, 35, we finally topped out at like around a 38. But I think as well, like a lot of people were starting to think like that kind of needed to happen. Everybody started to use, I heard like all over the place, the C word, capitulation, right? People were kind of looking for a capitulation in terms of, hey, we finally, like, we've been moving down now for several days. And, it did feel that way yesterday. So you just kind of had to go with it. And, it was, I made a statement yesterday in my trading room just saying, hey, if you made a few mistakes or if, things didn't work exactly the way that you wanted them to yesterday, I wouldn't really worry about that. When the VIX is flying like that, like I stopped out of a couple trades yesterday and,
awesome.
In the morning, and then just to see the market come back, I'm like, let me just get out of the way and see where this thing wants to go. And then you can kind of, and then you can counter pretty decently. But yeah, I heard you guys talking about the reversal time, which was around 12:20, kind of funny because the European market closed, not that they had anything to do with the volatility, but I was really waiting to see if we could kind of build off of what we saw in the first hour, because it was lunchtime, and lunchtime, it's the slowest volume of the day. And the volume was huge, which I'm sure that you guys talked about as well. Just the volume was ginormous yesterday. And you could look at this across products. Like I have right now, this is S&P futures up, and you could see the huge volume. But if you bring up the ETFs, when you combine the futures with the ETFs, the volume was just out of control.
Well, I saw a stat that Friday was the largest volume day in the Qs in at least a decade, and a lot of that was options expiration driven. But still, though, I mean, it's not every day you can say that.
Still a bigger day yesterday. I mean, and yesterday dwarfed Friday's activity.
Oh shoot, you're right.
and then
holy cow.
And then look at the volume from, I've been, not that I want to kind of compare what happened to us in February and March of 2020, but there are some similarities. And yeah, I mean, look at the volume compared, that was much higher than what we experienced. So, what I try to say to people too is sometimes, we kind of lost a little bit of muscle memory from this happening back here. And if you didn't experience what happened in the beginning of March of 2020, or sorry, the beginning of the year, this kind of, you could start to kind of compare this now, this whoosh that we saw over the last week. I mean, here's the move that we saw back then, and it's not all that different.
Yeah. This is a really good time, I think, with fear a little elevated, with some unknowns about the Fed and inflation and a lot of things beaten out. This is a really good time to like take stock and really like try like us take a step back and like what are your goals? What are you trying to do? Clearly it's not going to be as easy. I mean, it hasn't been as easy as it was. Basically, we had a gift from April of 20 to February, some respects even later, February 21. We'll call it a year. We'll call it April to April just to make it easy. That was a freaking gift. I mean, it was so easy. You literally throw a dart at the board, pick a stock. It doesn't matter. It was up, right?
That's true. I mean, I think when you say it now, that was the case. But you have to remember too, back in here. Let me bring up, where's my daily chart. Back in here, I remember, one of the things that, sorry, Thinkorswim likes to jump around. But I remember when we started to kind of build here, right, and move up, everybody was talking about.
It was not. It didn't look obvious,
and everybody was talking about a retest. Oh, you got to have a retest.
Oh, for sure, definitely,
Right.
definitely. I spent the entirety of April, May, and June being like, no.
I think I remember that because I listened to your show in the morning.
This doesn't make any sense. Nope.
Yeah. And you were pretty good with I think with the whole scenario. You knew your time frame. I remember, and you were saying, "Well, this is a buying opportunity for me." I'm a young guy. You barely even remember the first Matrix. You probably never even heard of Jaws or any of those movies.
What's that?
So,
no. I remember saying that, like, something I'll never forget is like the last day before Benzinga went remote. This is like March 2020.
Right.
And it was like the end of the day. Everyone's like, oh, we're packing up our stuff. We're going to work remote on Monday. And I remember like saying out loud to no one in particular, like, this is going to be an epic buying opportunity whenever this whole thing shakes out. Now, I didn't know that the buying was going to happen like a week later. You know what I mean? Because that's basically what happened. It was a week later. It was such a fast pitch. It was basically impossible to swing at. If you swung at it, Frank, congratulations to you. You got lucky. The rest of us were caught chasing a little bit after the fact. But you're right. It's all about time horizons. That's what it comes down to.
Yeah, I mean, and the other thing too is we're also going through, at that time, we're going through things other than concentrating on the market, right?
Yeah,
we were in
no
lockdown,
kidding.
and we're trying to figure out, like, how that's going to affect us, where we need it to be. So it's funny when these things kind of happen, and I traded through 2007, 2008, 2009 as an institutional trader, and what happened then, by the time that the bottom kind of revealed itself, and that wasn't for probably a couple months later, no one really wanted to buy the dip because they were worried about their job security. You didn't know if you were going to have a job, so you didn't really want to use your disposable income to be like, hey, I'm buying the dip, because people were in my job at the time, I worked for a big bank on a trading floor, and there was rounds of layoffs every couple of weeks. We were just seeing, groups, and not even your own firm, but other firms, people just being decimated in terms of being laid off. So it was like, you're going to buy the dip when you already have so much career,
That's a great
career
point.
risk going
That's
on.
a great point.
This is tough. It's a tough time, and you kind of look at what's going on now, and every one of these situations is a little bit different. But as you mentioned, with what was happening, for the last couple of years is the Fed was a big reason for that. So we've got this meeting tomorrow, and before the Fed went into their quiet period, we heard about the potential of all these rate hikes. And we're also hearing, as they're in the quiet period, or they've been in the quiet period for over a week now, we've also heard about all these different brokers come out and weigh in on how many. And it almost seems like they want to outdo one another. Well, I say 6. Well, I say 7. So, I think part of that has caused what we've seen over the last week is just no one really, when you hear about 3 rate hikes, and going back from a few months ago, when there were no rate hikes. Now it's 3. Oh, no, it's 4. No, oh, it's 6. It's 7. So, I think that kind of has an effect, and we've now experienced that where it's been total risk off, and people saying, "Hey, I'm going to wait until I hear from Powell and see what the story is." So
yeah. So yeah, a couple of reactions to that. First, like I lament when people say that and I'm guilty of this as well. I'm a hypocrite, but like when people say, "Oh, it's like so hard to call right now," it's always hard to call right now.
Yep.
It's never obvious. That being said, there are. Go ahead.
It's always easy hindsight. Hindsight 2020. Then
Right,
it seems
right.
obvious, right? But you're right on, Spence.
Sure. That being said, there are degrees of unknowns, and the 8,000-pound gorilla of what will the Fed do, how many hikes, is the 8,000-pound gorilla. I brought up the screen here. This is the CME's Fed Watch tool. This is just a visual representation of what the Fed funds futures market is pricing in right now as far as rate hikes, because you can bet on the Fed funds future, the Fed funds rate. You can do that.
Right.
There is a tool where you can bet on that. I shouldn't say bet. I should say trade, but whatever. There's no compliance here. And this is what the market is saying right now. Just to tell you guys where we are. We are here, left-hand column. It's where we are right now. Market saying 94% chance that as of today and tomorrow's meeting, we remain there. Market is saying 5.5% chance that tomorrow they announce a rate hike, a 25 basis point rate hike. So the market is pretty convicted on no hikes for tomorrow. Now, fast forward a couple months. When's the next meeting? It's in March, mid-March. Market is pretty convinced we're going to have a rate hike in March of 25 basis points. Some people are thinking we're going to have a 0.5% rate hike in March. There's a 5% chance of that happening.
Well, this is. Can I interrupt you just for a quick second?
Yeah.
So this is an excellent screen that you're bringing up, because it also it shows what the market is pricing in, right? Obviously, we hear about all different types of opinions on financial media about, just as I said, like the brokers coming out and saying, how many rate hikes, and of course you have all kinds of talking heads saying how many they think and so forth. But those are just opinions. This is actually what the market is pricing in, and it gives you a sense of where the market is kind of positioned a little bit. And the fact that this is much different now than it was a couple months ago, where the odds of a rate hike were not being priced in. So now that the market has kind of corrected and so forth, the market is now feeling that this is going to happen. And you could tell by these probabilities in what's called Fed Fund Futures. So a very important tool to use. And I think, going into this event, I think it's much better to have this in the back of your mind that the market has already adjusted. So we're looking for new information, right? So we know, there's 88%, I think, if I'm reading your chart correctly, there's an 88% chance that the Fed will move in March. So even if he says that tomorrow, that the market will be absorbing that, and you might get what's called the buy the rumor, sell the news, or I guess in this case, vice versa. The market, might actually rally on the fact that the uncertainty of, we didn't know what he was going to say. Now we know, and it matches the expectations. And then we might get more of a continuation than what we're seeing today, which is basically chop.
Part of me thinks, Christian, and as we say that, the market is trying to make a high of the day here. I did. Go ahead. I keep cutting you off. I'm sorry. No, go ahead.
Yeah, I wanted to, if you're done, I wanted to just talk about like how I kind of handle some of the expectations in terms of, because not only this, I mean, this is what makes this week so difficult, is not only do we have that going on, which again would kind of cover enough of events for the week, but you have all these earnings reports. You got Microsoft reporting after the close today, and you've got, everybody is also kind of concerned about are we starting to see a little bit of a slowdown? So there's enough things to worry about, right, in regards to these events. What I try to do as a technical trader is just focus on levels and say, being that we're dealing with so many unknowns right now, it's important to kind of say, okay, well, how am I going to trade this? How am I going to react? And I think, drawing out some scenarios about what could happen with the Fed if they're a little bit more dovish or if they're a little bit more hawkish, what stocks are going to kind of move with that. And I always start with first just looking at the overall market, and the three indices that I always look at, of course, are the S&P, the NASDAQ 100, and IWM. And what I'm looking for, this is just a 5-minute chart, and I'm looking at the value area for the day, which is using volume at price, right? And that kind of comes up with a significant level for me. So I've been watching this 43.32 level.
Okay.
We were kind of just drifting lower in the after hours market. But yeah, if we can kind of hang up here, and maybe float even higher would be great. But I think overall what you're seeing is a bit of an inside candle for the majority of names, but the higher multiple names, you're clearly seeing more give back in those areas. So it kind of tells you how the market is positioning itself a little bit. But one of the things that I'm also watching is, that move yesterday, and this can be seen on the 1-hour chart that I'm looking at. Even, if you don't have the value areas and my particular studies on the charts, absolutely fine. You could use the moving averages just to tell you simply, are we trending up or are we currently trending down? So what I've noticed, and this is like just a regular 50-day moving average, the one that's in here, and I just see that we keep failing at this every time that we try to break this. So really what I want to see for this week is just a little bit more confirmation. We've got the bounce. I want to see us get out of this pattern of just making lower highs basically, and having a moving average or two on your charts just kind of give you a sense of the trend, because we've been hanging below here now for a while. So I would really like to see us get over this one that I've got highlighted as a starting point. And then at least we've
real fast. Which moving averages do you use? Are you using the 50 and the 200?
So I've got my own special, ones, but I've got the 200 on my chart. So really, this kind of comes into play in the daily chart. But you could extend this forward like I am to the 1-hour chart or to other time frames. But the 200-day moving average, that's the one that I've got highlighted here. I think that's most important. That's one that I also on the daily chart that I want to see price get back above. Right. So that's a big one, is the 200-day moving average. Then the other ones are really not in play right now on the daily chart because we're so far below them. But the 50-day moving average, then I've got then for the shorter terms, I've got the 20, and that's an exponential moving average and a 5. The reason why I've got those on my charts is because when we're trending, particularly the 5-day moving average is really good, right? You always hear people say when we're trending in one direction, oh, we've gone too far. And what helps me, using those moving averages is to say, well, you may think that we've gone too far, but the market doesn't, and the market's not breaking down. So when we're trending like this, like we did back in October, the 5-day moving average, what you'll see a lot of times when you've got a strong trend in action is the price will stay above the 5-period moving average. Once you've got a change, you'll see price kind of duck below that 5-period moving average. And clearly that happened here. And if you notice where we are right now, we could speculate all we want on what's going to happen tomorrow, but we're still in that downtrend unless we see price get above that 5-period moving average. So that's really a good confirmation, and this helped me a lot when we were going through this, right? Because this whole drop that we saw back in the beginning of 2020, everybody kind of wanted to buy the dip at multiple places down this, but notice how price, there's a little bit of a tricky period in here. But once we got below back below the 5-period moving average, you could have wanted to buy the dip all you wanted to, but until this price started to get back above the 5-period moving average, which was right, at the bottom, then we were onto something. So, but until that happens, you're catching what's called a falling knife. You don't have any confirmation.
Christian, I would love for you let's get your thoughts on this. And I'm just going off of like my own feeling right now, which I know is never a good thing. You shouldn't feel, you shouldn't think, you should just react. But like, it just seems like last year there was an endless desire to buy the dip.
Yep.
Endless desire to buy the dip. In the last 2-ish months or so, I just don't I'm just not seeing that same quick reflex. And I don't have anything to back that up other than what the chart is showing you, right? Chart kind of says that, but like, it's, I don't know how to explain it. It's like it's just a feeling, and like it's from being on Twitter all day, and like it's just like, I don't know. Like, do you agree? You're free to not agree with that, but like I would just like your thoughts on that. It just seems like there is not everyone is as quick to just straight go by the dip, and maybe it's a result of the fact that for a lot of people that are in ARK stocks, for example, it's been a pretty bad 11 months, frankly, and they're just exhausted. I don't know.
I agree with that, and yeah, I mean it really goes back to what you just said with what groups of stocks. I think that, of course we're looking at the S&P, which has been held up much better than some of the high growth areas, and we don't have to use that particular one, but it's kind of just uniform within that group. If you want to look at, for example, not to pick on this ETF either, but this is also another big growth ETF, which is this is the IBD 50, right? Which I know a lot of people are IBD fans, or Investors Business Daily fans, but this has not acted very well either, and they have a different philosophy of how they're adding to their positions and taking them out. They often kind of do the, in my opinion, again, this is just my take, but ARK does a lot of, they keep buying the losers, which has not worked over the last year.
What does IBD do?
IBD does more, and I can't speak for them, of course. I'm just noticing how they normally shuffle in and out of positions, but they're seem to be kind of buying trends, right? And as soon as something breaks a trend, they will go ahead and remove that from their 50 names that I believe are in here. So it's a different philosophy. They're buying up trends, and they're selling names that start to kind of break down or that have broken down. But they are still concentrated in the same arena of stocks, maybe not exactly the same, but they're in growth, right? And I think we would say that ARK is also in growth, maybe a different class of growth in innovation, but still in that category of growth. But yeah, I mean, I think that the buying the dip has just, for a while, it worked for so long. Every time that we got a decent dip in the market, even if you were, not perfect in your buying the dip, the market would bail you out. And I think what's happened here is now different. And I think that you have people that, if they've been just blindly buying the dip, even just in the S&P over the past few weeks, or even, kind of once we got out of this little move that we saw here, it's been very painful, and the market has not bailed you out. And, there's some factors going on, and I think part of that is the Fed. And we don't know if there's some other, systematic issues right now in the market too. And I think we'll learn about that more as we get some of the heavy hitters that are reporting earnings, whether or not they're seeing any major systematic slowdowns in the economy.
That's a great point. On the earnings front, Microsoft tonight, Tesla tomorrow, Apple the day after that. So some big names coming down the pipeline. Christian, tell people where they can find you and hear from you and see you and all that good stuff.
Yeah, sure. So my Twitter handle is just first initial last name at Fromhertz. You could also go to our website, TribecaTradeGroup.com. You could just kind of check out what we've been doing on that site, and so that's where you could find me. And of course, if you have any questions, I'm easily reached on Twitter. But yeah, Christian, we're going to have an interesting week, right, Spencer?
Tomorrow, I mean, 2:00 statement, 2:30 press conference. It's not even so much what they said, but also like what is the I hate doing this, but like what is the dot plot show? How does the dot plot compare to that table that I showed you before? Right? Because is the dot plot saying, oh, a majority of members see 4 hikes? Because I think that's what it said last time.
Right.
But does that change? I don't know.
Yeah, we'll see if that changes. Go ahead. The Q&A I think will be most important for me. I mean, the dot plots is kind of interesting, but you have to realize all these these Fed governors and so forth are just, it seems like they're jockeying for position. Like they're very career motivated. And
it is a political job. Christian, part of me just thinks that let's just get one out of the way. Let's just rip the Band-Aid off. Give us the rate hike, rip the Band-Aid off, and then everyone will see, I hope, that the market won't crash off of one interest rate hike, and we can all move on with our lives.
I'm actually voting for that tomorrow too. I would rather just have them get the one out of the way instead of having the overhang of we have to wait till March for this nonsense. Sorry for lack of a better word.
I want that too, but then the other part of me is like, well, then they lose all credibility, and then it's like there's that whole thing. So
they're supposed to adjust to what the market is doing. So that's that's what I would be looking for. I'm more of the I like the rip the Band-Aid off. Just get it done rather than let's test the waters and
get it done. Yeah. Well, because you know what they're going to do is because they telegraphed the taper for like 4 months, so that's what they're going to do now. They're going to telegraph. They've been telegraphing the rate hike for what we'll call it a month, maybe a month, maybe 2 months, 1 month, 2 months. So we're due for another 2 to 3 months of talking about the rate hike before we get the rate hike. By that point, everything, in theory, should be priced in, but I don't even know the whole thing.
Yeah, could I just say two more quick things, and then I'll let you fellows go for the day. Yeah. So that's how I would kind of think about trading things, and really manage your risk appropriately. We're all going to have ideas and opinions on which way things are going to go, but really having some levels to say and pre-planning out what your day is going to be. Here's what I'm going to do. Think about too, like, if the Fed is more dovish, what stocks are going to rally the most? What do you think is the highest probability of the stocks that are going to rally on a dovish Fed versus what do you think if they're going to be kind of in line with expectations or if they're going to be hawkish, right? So putting together a little bit of a scenario analysis, I think, helps. And then having levels to know what you're going to do. And this way you can kind of take some of the emotion out of the day in terms of if there's really whippy price action, to have that plan in place. And then also, take note of what's kind of working today. I'm surprised, but this was one of the things that I noticed too at the end of the day when I was going through, I have a sheet that I look at to see like what names are moving the most intraday, as well as what they did for the day. But yet this is how they're looking for today. But yesterday, like the energy stocks were super strong. So it wasn't
again today, frankly.
Yeah, and again today. So I'm long a little bit of OIH. It doesn't have to be a swing trade. It's working actually here. But that's another thing too. Like if you went home if you went long a lot of positions yesterday, especially like in tech or something like that, you had to dig yourself out of a hole. So being very nimble, and not having much risk on is an advantage that you can kind of go back and forth with this market depending on what it wants to do. You still want to be prepared, but being nimble is very important right now in this market with the VIX over 30.
Great point. Christian Fromhertz joins us every other week. Christian, a pleasure as always, man. Have a great rest of the day and good luck this week.
Thanks, guys. You too. Do the same.
Alrighty. It is 1:44. It appears Tim Quas is not joining us today, Aaron, but that's okay.
All right, well, we got a couple options here. We could always wrap the show a few minutes early, but at 2 p.m. we have the roadmap coming up with Toy Booger. You heard me.
What?
Toy Booger.
That came out of left field. Of all the words you could have said in that moment, that was not the one I was expecting.
That's what's on the calendar. I'm just shooting it like it is. I don't know what that is. I've had a pretty eventful day in my portfolio, honestly. At one point, I was down about $240. Currently down now 80. I've had a big comeback. I bought some Apple calls earlier that are up 41%. Bought some MRO. All right, guys. I can't take all the credit here.
Okay. Then don't.
I really can't, because Options Mike came on this show like a few months, maybe like a month and a half ago, and gave us MRO, Marathon Oil, when it was like down here at like $15. And it's been going crazy. But anytime you see a stock like this, I mean, look at this trend. I mean, this isn't that sophisticated of a chart, but you can see what it's doing. It's going up, right? This is the past 3 months from December 20th to now. The past 3 months, past month, up 21% over the past month. Let's compare this to SPY over the last month. Energy has been your best performing sector, yes, but even within energy, MRO has been a leader, which that is something I love. If you look at the sectors that are doing well, and then you see what's doing the best out of the sector that's doing well, that's showing you the leader. So I got in on some MRO calls earlier today. Not that a lot of money, but you can see they're up 73%. So that's not bad. That's not nothing to sneeze at.
It's not.
These Apple calls up 30. This is what I don't get. I bought these Coinbase calls because Bitcoin's been like strong all day. Bitcoin keeps going up. So Coinbase is not going up.
I'm so glad you brought that up. That's a really good point.
You're welcome.
There have been a number of, Coinbase is such a young stock. There's been a lot of people questioning how the stock will trade as it relates to Bitcoin. In theory, because Coinbase is an exchange, right? In theory, it should go up when volume goes up.
That's why I was looking at the volume for Bitcoin earlier.
In theory, it should.
In theory, yes.
In theory, there should also be some correlation with Bitcoin, with the price, because, we can corroborate this from our own business. When price goes up, enthusiasm goes up. When price goes down, enthusiasm goes down. But it is interesting to see that Coinbase, the stock, get absolutely bludgeoned, kind of regardless of what Bitcoin does. So, hey, congrats to them. They top ticked it. I don't know what else to say about that. I think if you're buying anything like that, if you're buying any recent IPO at all-time lows, do it as a speculative thing. Do it as a spec trade. Don't be throwing down some coin on a stock like Coinbase right now, pun intended, or a stock like it's totally different, but like Toast, TOST, the point of sale company for restaurants, all-time lows today. IPOs are just weak in general. If you're gonna buy any of those, I'd be cautious. That's all I'll say about that. I am in the market for ideas for my shopping list.
For stocks? I just gave you 2 great ideas. DocuSign?
Yeah.
Asana?
Asana's getting smacked in the face today, so I don't know if I'm down with that.
Well, but it was one of your best performing stocks yesterday.
All right. Okay, let me be more specific. I'm in the market for ideas for my shopping list, not technology. I've got enough technology. I've got enough growth, preferably not like high growth, right? I've got enough of that. I've got an ARK fund. I've got a couple of cannabis stocks. I got Airbnb. I don't need more of that, okay, in my life. Not restaurants. I'm terrified of restaurants right now. I'm terrified of the whole space. And not energy. So I guess that really just leaves me like industrials, utilities, materials.
What about Boeing?
And consumer staples and discretionary. Boeing is an industrial. I have not looked at the Boeing chart. Where is Boeing?
Boeing's at 200 a share right now.
Let me pull up a longer term chart so I can.
Here's the thing with Boeing, right?
They have a duopoly.
They have a duopoly.
Or is it a three-opoly? What's the word?
I don't think so. I mean, it's Airbus and Boeing. Who else are you gonna throw in there?
No, I don't know.
The cost to enter this market, right? Like the cost to compete with Boeing or Airbus is just too big for anyone to put that type of money up to really be a competitor. Down the road, eventually there will be some company. I mean, Jeff Bezos could say, hey, I want to take on Boeing and start a new airline manufacturing company. Fine. But that's not happening anytime soon. The demand for travel is going to continue to increase as we head more and more out of this pandemic. To me, it's
all right. I think he maybe got me here a little bit. I'm gonna have to like do some. Let me actually like look at like the numbers a little bit on my own time and just. This chart does not like. This doesn't look terrible. Maybe I do this, and I'm not super convicted yet. I don't get convinced off of like 20 seconds of looking at a chart, but I have to let this idea marinate. Maybe I buy Boeing here, and because I'm not super convicted, if I do that, I throw a stop out. Say at what 185? What's that low? Nope, we're not there. All right, what's that low? 190, 191. All right. There are worse ideas. This is going on the shopping list.
Jay Rice has a great idea too.
Boeing is going on the shopping list. I don't know if I want to buy it yet, but it's on the list. What else we got?
Viacom CBS.
Are they a takeout candidate?
Yep, that's what Jay is saying.
Oh, is he really?
Yeah. I mean, think about it. We were talking about this earlier, right? Content is king. You've got all these huge, all the biggest FANG companies are spending money in this space, whether it's Apple, Netflix, Microsoft. Viacom right now has the rights to a lot of very important sporting events.
Do you know them?
Yeah, Champions League is the biggest that comes to mind. Champions League, of course, is
they have the U.S. broadcast rights for that?
For the Champions League, yes.
Sorry, because I'm kind of a soccer noob. Isn't that like every 4 years?
No, that's the World Cup. Champions League is every year. Champions League is really cool because it's really the only league of its kind. So in soccer, every like major country has their own league. Right. You have the
and then you get the countries together.
You have the English league, which is the English Premier League. You have the German league, which is Bundesliga. You have the Italian league, which is Serie A.
And the best team from each league.
Exactly. Each league is allotted, like the English Premier League is allotted 4 spots in the Champions League and only the top 4. So it'd be like, I don't know, you can't really do it because there's not like, it'd be like hockey if you took like the best NHL teams, the best Russian hockey teams, the best Finnish hockey teams, and they all played each other. So the Champions League is really cool.
Got it.
Viacom owns the rights to that. They are also in the rotation, of course, for the Super Bowl, and they have big NFL rights. So every year the Super Bowl rotates between the big 4. You have ABC and ESPN, which are Disney. You have Fox, you have CBS, and you have NBC.
CBS is Viacom, NBC is Comcast.
Right.
What if, hear me out here. I know now we're getting off topic. The Super Bowl airs exclusively on like Apple TV.
Yeah. Oh, they're 100% trying for that. I mean, I don't know.
You have to have Amazon Prime to watch the Super Bowl.
We've seen Amazon.
Can you even imagine?
We've seen Amazon try to get into. They paid for the rights for some Thursday night NFL games. Amazon also is paying for the rights for some PGA events this year. I don't know if we'll ever. I don't know. I don't think the NFL will ever want to do that. Like put the Super Bowl behind a paywall.
No, I was
but
kidding.
there is a price point probably that if Amazon offered.
Maybe.
Billions and billions.
Wait, so back to the Viacom. So you're saying this is a takeover target? I guess in theory it is, and I guess it's cheap. I don't know. I'd have to let that marinate a little bit more. There are some more ideas in the chat. I don't want to ignore the rest of y'all. Burke B, I own that just so I could get invited to the meeting. Oh, IYR, Shelly. Speaking my language here.
What is that?
Real estate ETF. Yeah, actually, this is also not a terrible idea. Now, I have no idea what is in this fund. I'd have to look it up. I don't know if it's commercial, residential. I got no clue. But yeah, inflation hedge, real estate. Heck yeah, I'm all about that. Okay, IYR is going on the list. The list just means I have to look more. It doesn't mean I'm going to buy it. I got to look more. I got no idea what is in this fund. I have a little bit of real estate. I own the SRVR, the server ETF. It's data centers and it's data center REIT. Data center REITs is what that is. So I've got that guy. Slow and stodgy, not going to make me rich. IYR is going on the shopping list. Thank you, Shelly, for that idea. Could use a little more real estate in my life. Nucor got mentioned. Kroger, but Kroger's had such a run though, hasn't it? Let's look at Kroger. Oh my gosh, what a run! You know what I want to do? And we'll do this next week. But every single month, I track my all my spending. I break it down into several categories. I'm just gonna do a look, and I'm just gonna see how much more money I'm spending on groceries, because I know it's more. I know the cost.
Also, I decided something.
What?
I was talking earlier about the Microsoft calls, and I'm going to regret this.
You didn't do it.
But I'm not going to do it, and I already have these Apple calls, and if Microsoft like crushes it and is trading higher tomorrow, Apple probably will be.
No, that's sound logic.
Like I'm double exposed essentially if I buy these Microsoft calls and I already have the Apple
you're
calls.
fine. I think you're good on that regard. I think that's a good idea.
Okay.
I think that's a really good idea.
All right. With that said, I have where does it show it? I don't know.
I was stunned because I really try not to look at my portfolio a lot, and I was stunned. I pulled it up this morning, and I was stunned to see that I'm actually down in my Airbnb.
Oh,
I was
really?
up so much.
Really?
That's
why I was.
I'm down in my Airbnb.
Man,
I was like, my eyeballs popped out of my head. I was like, what?
I love this stock. I'm not in it at all, but I mean this.
This is like the best performing stock I had for a hot minute there.
I know.
I'm down.
I'm gonna put on a crazy trade at this at some point.
Oh man.
I'm gonna buy some like crazy it's at 143, and I'm gonna buy some like crazy $200 calls that expire like a year out. These I've been looking more and more at these leaps, and they're a much bigger investment. Like a lot of times I'll just trade weekly or monthly options that are like $200-$300, whatever. If I hit them, they can go up to $1,000. If I don't, I'm out $200-$300. But some of these leaps that you're getting more into the thousands and thousands when you're talking about investments, you can really make some serious money if you like find a stock that like Luke and I were looking at leaps on Baba, right? But if Baba's at 120 and you buy $200 leaps on Baba and Baba ends up going up 80% over the year and gets back up to that 200, you're talking like tens and tens of thousands of dollars you're banking. But I'm finding myself doing.
You're playing a dangerous game.
I know. Well, the good thing is I'm doing a lot more research on these leaps, like before I get into them, because they're so much more expensive than the monthlies or anything like that.
You only need to hit one, right, guys? The problem is you get one for 100. But that one is a big one.
Yeah, I don't know. I think there's a lot of leap candidates out there right now.
Anyway.
But yeah.
All right. I think that'll be a wrap for the show today. Let me check to see if there's anything that we wanted to discuss that we didn't, as I keep an eye on the market. And the banks just turned. I missed the banks turning green. Did that just happen, or am I just late to the party on that? I know. American Express is having a good day.
Now, so I like this parameter of looking at what a stock is at compared to its pre-COVID levels.
Yeah.
I just don't agree with like Bank of America being 30% higher than it was pre-COVID. Like it's a bank.
So someone
what is so great?
Someone asked if I own any banks, and I don't. And the truth is, I am afraid to own a bank.
Oh shit! Nvidia's ripping.
I am afraid to own a bank, and I own a bank by proxy because I own, the VU. But owning banks scare me. I think, and I'm not saying it's logical, but like the whole Great Recession thing really did fuck with my head.
You have positive catalysts for the bank, the interest rates, but the question is are those already priced in? We all know they're coming.
I don't know.
J Rice, Fix goes green. Dude, it's the same story as yesterday. We're going to finish the green today. 2 hours. All right, guys. We'll be back tomorrow. Till then, happy trading. I'll update you guys on my options trades tomorrow. Let's pray for some green.
I've
got some ski passes to buy.
Yeah. Trying to go skiing?
I'm only going to be able to go skiing if these options work out. If not, I'll be sledding.
Yeah, happy. That's right. It's SoFi and a bank. Yeah, and it also is not a traditional bank, which is what I like. But anyway, it's a wrap. Hit that like button. Also, if you're watching this show and you're not subscribed to our YouTube channel, why not? What are you doing? We are going to be adding perks for subscribers like any day now. Get in before that happens. Hit the subscribe button. Hit the like button. Tell your friends. or don't do any of that and then just be a grouch.
Yeah, and if someone wants to buy me if you buy me a ski pass, I'll post videos of myself like falling or something.
I will post a video of myself falling and then struggling to get up, which I can do.
Wait,
but
you can't
struggle.
I put the ask out there first.
All right.
All right, guys.
I'll post a video of me doing a snowboarding lesson. It ain't pretty.
Ooh, that would be fun.
It ain't pretty. It ain't pretty. All right,
Dude,
the roadmap is
Rohan,
live.
man on the street on the ski slopes, we can expense him.
Let's do it.
All right.
Yeah, that's happening.
All right.
The roadmap is live right now. Have a good rest of your day.
Love you
everyone.
guys. See you.